Hi, good morning everyone. I welcome you all to the Company Law Marathon. Now, the Company Law Marathon, first of all, I have taken one exemption marathon earlier. The video you will get it on our YouTube channel just a few days back. I had taken the exemption marathon. In the exemption marathon, you will be able to memorize all the sections that are there. Now, also remember that I will have my marathon. These are my dates. Okay. I was a bit under the weather. I was not keeping well for 1 2 days. That is why I couldn't take some of the chapters of ECIPL which I had planned, which I will take it in. Maybe if I'm taking the marathon in the company law marathon now in the evening, I will take my balance lectures which I had planned. Okay. So not to worry, if you're in my WhatsApp and Telegram groups, you will be updated about it as well. Now, firstly is remember that I have given access to all the students to our lectures in the Dream batch. The link is in the description of this video. I believe over 600, approximately 600 students have now enrolled. You enroll yourself and inform your friends as well. It's an access to the paid lectures, and I can assure you not a single question comes outside my videos, because we I have ensured I see the past exam questions, I see the modules, I see the guidelines, every resource possible. I even go into my CMA and CA modules also, just to see I don't leave out any particular thing which is important from exam point of view. So I have given access to directors. All the updated lectures are there. You can go ahead and complete it in the shortest possible time. Also, the access is available. You can watch it on your mobile phone as well as your laptop. Today in the Dream batch, I don't add a few chapters which I want to cover it in the marathon. Okay, so which I want to cover in the marathon, I leave it. I don't put it because some amendments are there, some things I want to highlight. So one of those topic is your meetings. Okay, one of the topics is meetings, and today will be the topic of the day to complete the general meetings topic. So are we good to go? Can we start? Now, just before I start, remember one thing: meetings, I will be doing all the sections. I require approximately 3 hours of your time, 2 to 3 hours. In that, this meetings is around 20 marks confirm weightage, 20 to 25 confirm weightage in your exams. I will cover including anything that which has come in the past exam and which can come in your exam, which you will see that I'm covering not only the sections, the subsections, the rules, and the form numbers. So nothing absolutely will be left out. You have to first watch my video. You can simultaneously refer your module, or you can note down in a book and pen all the sections and all the relevant points that I'm telling you. That is more than sufficient. And then when you go to any book mentioned, whether module or any other book, everything will be covered. Okay, so have I made my clear myself clear? Okay, yes. Okay, yes, great. Okay, let's start. And again, this is applicable for both old and new syllabus students. So obviously general meetings and directors are there in every single old and new. You can simply finish. Okay, so right now I'll be taking in depth. Okay, so not to worry. Let's start. Yes, and lectures will be there. Only yesterday and day before are not keeping well, so I could not take the lecture. But I will cover it up in my next in the next few days by taking extra lectures. Okay, so let's start. So just a small little smile, and with the smile we start with the lecture. Hi. So we'll be starting with a topic called as general meetings. Now, general meetings is for the shareholders of the company. Okay, the members or the shareholders of the company. There is a board meetings which is held for board of directors. The topics for that is covered in your section 173 onwards. Here when we see general meetings, which is a meetings for the shareholders of the company, it is covered in your chapter 7 of the Companies Act 2013. The section numbers are from section number 88 to section 122. Your Companies management and administration rules or 2014 will apply. Then there are forms which you have to inform whenever you're taking. It is MGT 14 because the name of the rules or the chapter is your management and administration. So MGT is for management. So form numbers 1 to 15, and with this you will follow your secretarial standards too. Now this is a very important slide because anything asked in your in your general meetings topic, you need to quote it, that as per section 7 read with section 88 to 121 122 with the rules under 2014 and form numbers. At least if you don't remember the specific section, you can quote this entire thing. Okay. Now when we go to see individual sections, now it's better I will be making you all do all the particular sections. Now there is a technique also to learn the sections, which towards the end I will teach you. Now I'll just take a brief overview of the sections which all we will be covering. First of all, section 88, okay, talks about register of members. Section 88, right now just we are taking a bird's eye view, then we will go into everything and learn it in depth. So section 88 is talking about a register of members where every company has to maintain a register of who all are the shareholders of the company. Then comes section 89 and 90. So these could be read together. Now this is about register of the company. This is about beneficial ownership. So beneficial ownership is given in your section number 89, and 90 is about significant beneficial ownership. Okay. Then comes your section 91, which talks about closing the register of members. Now when we have the register, every time a new member is there, we will add his name, but at some times we will close the register of members to do the tallying of how many members are there at moment when we want to do the counting. So we close, the provisions are contained in your section number 91. Then section 92 talks about your annual return. Annual return, it is very important. It comes at almost all the levels. Section number 92. 93 has been omitted, and then we have 94 and 95. This also we'll read, which talks about the registers, the place of keeping the register and register to be evidence. Okay, first is these parts, and then we start actually with the general meetings topic, where you have about annual general meeting section 96, or section your extraordinary general meeting is in your section number 100. So first we will complete till section number 95, and then we start with AGM and EGM of the company. Now when we see the form numbers also, it is from MGT 1 to MGT 15. Now MGT 1, 2, 3, okay, will be about your section number 88 only. In section 88 about registers 1 to 3 only gets hit. This is a register of members. This is a register of other security holders like your debenture holders, etc. Then comes your foreign register, which will be in MGT 3. Okay. Then we'll see like this, and we'll complete all the form numbers as well. So this was a basic overview of the topic that we will be covering in the general meetings topic. As we saw, general meeting starts from section 88, goes up till section number 122. So let's start with section number 88. 88 talks about your registers of members. So what do you mean by that? Now every company has to maintain certain statutory registers. Certain statutory means law has told them that listen, you have to maintain these registers. Two important registers you should know. Obviously, one is a register of all the shareholders where their names will be written that this shareholder is holding these many shares. So that has to be maintained in MGT 1. Now this is a register of members. Members and shareholders are one and the same. Shareholders, but you can also have debenture holders, bond holders. So their register will be in MGT2. Clear? So what they are saying, every company shall maintain and keep the following registers in rule 3, that is MGT1 and MGT2. MGT1 is for members and MGT2 is for debenture holders, bond holders or other security holders. Clear? Now, section 88 subsection 2 says that wherever we maintain a register, we should maintain an index of their names also, which is obviously simple, like how we have an index 1 2 3 4 5 6, like that in the index we should also write the name of the shareholder and what is his shareholding and all his details. So that is simple subsection 2. And subsection 3 says, listen, if someone is holding demat shares are online shares. Now is a trend of online shares. You open a demat account and buy and sell shares electronically. So when you do that, there is a organization which is appointed by Government of India to handle online shareholding, and they are called as depositories. So depository is an organization that holds shares in electronic form. So if I am opening demat account and my records are maintained with the demat, that is the depository, so I will also be considered to be a shareholder of the company. Common sense, because I'm not holding in physical form but I'm holding in electronic form, and the name is held with the depository, but I am the beneficial owner. So they call me as a beneficial owner of shares. So online shares, when I'm holding, I am called as a beneficial owner because depository is holding the shares electronically for my benefit. So the register for beneficial owners maintained with depository. So demat shares, when they are holding my shares and I am the beneficial owner, so I also am deemed to be the member, and even that register maintained by depository is also maintained and deemed to be a register of the company. So with this we have completed MGT1 and we've completed MGT2. MGT1 is for members and MGT2 is for other security holders. Clear? Now we'll come to the third important register, very important, because MGT 1 2 is there, but what is most important is something called as your foreign register. Now what is a foreign register? Is it mandatory to open a foreign register, and when it is opened? Let's understand. So the provisions are contained for foreign register in your section 88 subsection 4 talks about foreign register. It is to be read with, I'll call it as read with rule 7. Very important. Let's understand what it is. Now a company like Reliance Industries or Tata's does not have only shareholding from India. There are investors from abroad as well. Let's say they have significant shareholders from United States. So that time I can keep a separate register in United States where only the name of those US citizens will be mentioned who are my shareholders. This is called as foreign register. Now this foreign register is opened outside India, kept outside India, but a duplicate foreign register is kept in India. Every time entry is made within 15 days, in the duplicate register also entry should be done, which we are maintaining here. And one very important thing is that this foreign register will be treated to be a part of the company's principal register. Sir, what is the use of this foreign register? So very simple, it becomes very convenient to know, listen, in USA these are my foreign shareholders. A separate book is maintained. So here we have Indian shareholders, here we can have US based, in another country if we are going, and so we can open a separate register kept there. Here also someone wants to inspect who is a foreign register, they can check the duplicate foreign register. Very simple. So let's see, a company, if so authorized by the articles, may keep. So a company may, it's an option given to the company that if your articles are allowing, then you're just keeping in a country outside India a part of the register called as foreign register. Now, one very important thing is only foreign register should have of citizens of that country. When they are transferring the shares, let's say one USA citizen has transferred to another USA citizen. So that noting has to be done in the foreign register only. So when they liquidate, those entry also has to be maintained whenever they are selling or buying. Entry will be there in foreign register. We'll read all the provisions, okay? Containing the names of the members, debenture holders, other security holders residing outside India. Simple. So this is done. Foreign register is done. Now we'll see into rule 7 what all they have said. I've already explained what it is there, but let's look at some of the points. Firstly, if the articles is not allowing, can I open a foreign register? Yes or no? As per rule 7. Very simple. So a company may do if it is authorized by the articles. We've already seen. So rule 7 sub rule 1 over. Second, now when the company plans to open a foreign register, they have to inform the ROC of India that listen, one register is being kept abroad, which will be called as foreign register. This is in MGT 3. So filing notice of foreign register, the company shall within 30 days from opening any foreign register inform the registrar of MGT 3. So very, very important. MGT 3 is for foreign register. It has to be informed to the ROC within how many days? Okay, inform ROC within 30 days of opening the foreign register. So this is a very important line. Now all your 3 forms are done. MGT 1, 2 and 3 is done. 1 is for members, 2 is for other security holder, 3 is for foreign register. Now foreign register, as I told you, it is deemed to be a part of the principal register, because in principal register we are holding all the shareholders who are Indian, plus who are US citizens are also my shareholders. So that is also part of the principal register. It's deemed to be a part of the principal register. Simple. Now what if someone wants to inspect and what it is there? So yes, all the provisions of inspecting a normal register shall also apply. Even somewhere abroad who wants to inspect can inspect it as per the company's articles. So again, a foreign register may be kept open for inspection if someone wants to inspect. Binding decision by the competent authority. Now what happens is, let's say if as we have in India today, if my name has been added or wrongfully deleted in the register of members, if my name has been removed, so I go to NCLT and then the order is passed for rectification of register of member. This is a provision. Okay, so if there is a dispute, normally if and the dispute is in India, okay, then we go to NCLT. Then we go to whom? We go to NCLT. But if the dispute is outside India with respect to foreign register, the 2 foreigners are fighting. One foreigner is saying that why my name has been removed, why my name has been added. So all that we will not go to Indian NCLT, then you will go to competent authority of that country. So if a foreign register is kept open by a company in any country outside India, it is kept, the decision of the appropriate authority shall for rectification of register shall be binding. Next, simultaneous entries after approval. Now very simple, that simultaneous entries after approval. Entries in the foreign register must be made simultaneously, okay, after the board approval for allotment of transfer. So moment there is a allotment of shares by BOD. Always allotment of shares is done by BOD. So as we give it to Indians, then we add it in the register. Similarly, moment the board of directors has allotted allotment of shares by BOD to the foreigner, it should be add in foreign register. Simple. Okay. Entry should be made in the foreign register. When I say simultaneously, means immediately after your you can call it as immediately. Okay. Next, transmission of entries to India. Now this is very important point, that foreign register, whatever entries you are making in that, within 15 days you have to make the corresponding entry in the register in India also. So the company must transmit to the registered office a copy of every entry in any foreign register within 15 days from after the entry is made. So moment the entry is made in a foreign register, within 15 days, and the copy of that, which all changes you have done, should be given in India, so that we can update the duplicate register. So duplicate register should be kept, and it is deemed to be a part of the principal register. And this duplicate register of the foreign register is kept in India. Distinction and registration of securities. Securities registered in foreign register shall be distinguished from those in the principal register and any other foreign register. Now, what does this mean? And no transaction for securities in a foreign register shall be registered in any other register. Now, you tell me, what are they saying? I've already explained it to you, that if a entry is made, if your name is added in the foreign register, any sale or purchase after that, any transfer, okay, should be made in that foreign register only and not in any other register, otherwise it will lead to confusion. For example, Mr. Smith's name is there in the foreign register. Mr. Smith has sold it to Mr. Tyson. So Smith selling from Tyson, this entry will be recorded in foreign register only, not in any other foreign register, because for different places I can have different foreign registers. For USA I'll have different foreign register. For Germany I'll have different foreign register. For Singapore I'll have a different foreign register. So security is registered in the foreign register. Okay. No transaction of securities in a foreign register shall be registered in any other register. So this is different from any other register is what they are trying to say. So that there is a continuity of record. What is the purpose of this? Continuity of record. That his name was added here. Now from here where it went, here only I'll come to know that he sold it to someone else. Discontinuation of foreign register. Very simple. You had an option to maintain a foreign register. The company may discontinue any foreign register and they can transfer all the entries to another foreign register or principal register wherever they want. So they may discontinue and then put the entries wherever they want. And that is it. We've covered all the points of foreign register and register of members and register of other security holders, that is MGT 1, 2, 3, read with rule number 7 for your foreign register. That's it. Okay. Now let's get into significant beneficial interest. Okay. Very important. After this SBO, I can give in writing to you. After this section, I will give in writing. Right now on YouTube, I'm declaring significant beneficial ownership will come in your exam. 110%. There is so big amendments and changes and additions in your module. Okay. So I will tell you what is that also. Okay. Now let's start with significant benefit. This is, remember, significant beneficial ownership is in section number 90. Section number 89 is about beneficial interest. So that also I am explaining. Okay. Now let's start. Hi. So now we'll be starting an important topic called as beneficial interest of the company. It's given in your section number 89, which talks about beneficial interest in the company. Now first I will read it to you and you will feel why it is so funny. It will look very funny, but then I will tell you the logic, the sense, and the practical side where your entire perception will change and you'll say, oh, okay, this is where it comes. Okay. Now, section 89 is read with rule 9. It talks about declaration of beneficial interest in any shares. Let's read first. If the shares are registered in my name, but I don't have any beneficial interest in the shares, it is held for someone else's benefit. So that declaration needs to be made. So let's see. First is declaration by registered owner. So if my name has been added as a shareholder of the company, but I don't have any beneficial interest in the shares, someone else has beneficial interest. So I will disclose that my name is added, but I don't hold any beneficial interest in the shares. Means I don't have any rights in the shares, to be honest. All the benefits and everything will ultimately be given to the beneficial holder who is someone else. So in what situation it will come, I will explain practically to you. A person whose name is entered in the register of members as the holder of shares. So my name is added as the shareholder of the company, but does not hold any beneficial interest in the shares, then such registered owner shall file a declaration in MGT 4 within 30 days from the date on which the name is registered in the register of members. Sir, what it means? If my name has been added and I'm not the ultimate beneficiary of this, then I should disclose within 30 days when my name has been added. We will also catch the other guy also. We will also catch the other guy, that is who has the interest but who doesn't have his name. Section 89 subsection 2 talks about beneficial owner. Every person holding a beneficial interest in the shares. So every person having a interest but his name is not added, but is not registered as the shareholder of the company, he shall file a declaration disclosing his interest in MGT 5 within 30 days from his acquiring beneficial interest in the company. So when my name has been added, okay, when someone's name has been added and I am holding beneficial interest, then my responsibility is also there. Where any declaration is made under section 89 subsection 1 and 2, that is registered owner is also informing and beneficial owner is also informing, the company shall note a declaration and file within 30 days from the receipt of these declaration in MGT 6 with the registrar. So now I'll explain what it is. Pay attention. Okay. This is first of all given in section number 89. What does it talk about? Beneficial interest in share. What does it say? That if my name is registered in the register of members, but I don't have any beneficial interest, then I have to file with the company a form. What is the name of the form? Registered owner whose name has been added but doesn't hold a beneficial interest. He will inform the company in which form number. I just did MGT 4. Okay, registered owner will tell that, listen, my name is added. The beneficial owner who has beneficial interest in the shares but his name is not mentioned as a shareholder, he will also inform the company that, listen, this is the transaction, and he will inform in MGT 5 within 30 days. Within 30 days. Once the company gets a declaration from these two guys that, listen, this guy is saying that this is the condition, then the company will inform the ROC in MGT 6. In MGT 6 will be informing ROC within 30 days of receiving the declaration under MGT 4 and MGT 5. Clear? Yes, very simple. So RO informs in MGT 4, BO informs in MGT 5, and company informs in MGT 6. Now, sir, concept is over. But now let's understand practically how it will happen. Now I'll give you two examples, and both these examples are bang on relevant. Okay, bang on, it applies. Suppose if my brother is there. Okay, he lives outside India. Okay, he lives outside India. Very rarely he comes into India. So then what he does, he puts the shares in my name. So he's put the shares in my name, and he goes abroad. And he also says that, listen, it's for my interest. I will pay the money, all the rights, title, dividend, attending the meetings, all the procedural work you do, whatever benefit you get, you transfer it back to me. So the beneficial interest is to my brother. So ROC, we have both these people. It's a genuine transaction. It is due to no wrongdoing is there. Proper income is also genuinely earned. It is only because the person will not stay in India. He will not be able to attend the meetings. He will not be able to participate or any kind of appearing. He will not be able to do. So he says, I'll put it in my brother's name. I say, okay, fine. My name is there, but beneficial interest is somewhere of someone else. Company will inform it to the ROC. That's it. Done. Second example I will give you, which is also very practical. Okay, so this was example 1. Now example 2, what happens? Now pay attention to this. I learned it practically when I was dealing with companies. Now there was a private company. Okay, there was a private company. Okay. Now this it was being taken over. Okay. Then there was a holding company. This holding company wanted to own 100% shares of the private company. Very simple. A private company shares was being held 100% by the holding company. Tell me one thing. Is it legally possible to hold 100% shares? Is it possible to hold 100% shares? This is a wholly owned subsidiary. That means 100% shares are of a holding company. Is it possible? Yes or no? I want from you. So answer is that, listen, when we read company law, private company, it requires minimum 2 members. It requires minimum 2 members. So here, if 100% shares are held by one person only, then who's the second member? So to fulfill that requirement, holding company appoints a person. Okay, or it could be another subsidiary. It could be another ABC Limited, okay, held by the holding company only. And the private company, they will hold 1% share, and this will hold 91% shares, and ultimately the holding company must be a 100% holding here also of ABC Limited, or might be this guy must be a director of the holding company under this. So can I say these people who are there, they have not paid the money, everything has been given by the holding company. So they will become a beneficial owner of this share. We will register the shares in their name, 1 share, because we have to keep. Okay. And balance we will keep it. So they will become the registered owner, and then this holding company will file something called as a beneficial ownership form, that, listen, we have just to maintain that minimum 2 member requirement, we had to do this. This guy is a mere beneficial registered owner. Beneficial interest is in my hand. So this example is also perfectly correct. So holding company MGT 1, MGT 4, 5 and 6 by registered owner, this is by beneficial owner, and this is where company informs ROC. Concept clear? Yes. So that is it with the concept. So if you go to see, now a person whose name is entered in the register of members but does not hold beneficial interest, that he's a registered owner. He will inform in NGT4 the beneficial ownership who has, his name is not mentioned, but he has interest in the shares, so, or he has paid for the money, so he will inform in MGT5. And when we inform, declarations are received in section 89, then the company informs within 30 days in MGT6 to the ROC. And that is it. We've covered the provisions of beneficial interest in the company. Okay, now we'll see the next massive thing which you can write it, that it is surely coming in the exam. In both old and new syllabus, in both old and new syllabus students, the modules has been updated to add significant beneficial ownership with examples and all the rules and everything. So this form numbers, so this is very important. It is a short exam question, okay, which I will be teaching you, but I will be teaching you in depth. I can write and give you, nothing will come outside, and you will realize that once I complete the topic. So are we good to go with significant beneficial interest? Now till now what we did was still general. Out of all this that we have done, foreign company comes, foreign register comes, which you should remember, and this significant beneficial ownership comes. So good to go in the chat box and I start, because for this little bit of sense I'll require of yours. I'll require attention, serious attention to complete this topic. Clear? Okay, good to go, great. Okay, let's start. You open your module significant beneficial ownership wherever it is written. In your module, check your index where significant beneficial ownership is written. Open it. I'm going to do it now. They have just increased, but they have everything about significant beneficial ownership they have added. Just seeing the forms. Let's start. Hi, we'll be starting with a very important topic, that is your significant beneficial ownership. Now this video will be completely in depth, covering all the aspects of significant beneficial ownership. Now let's understand what is the need and what is the meaning of significant beneficial ownership first. Okay. Now this happened to combat crimes, and this happened to increase the transparency of company ownerships. Let's take an example and then I will explain the theory. So normally if XYZ Limited is holding 11% shares in ABC Limited, so I'll call ABC Limited as the reporting company. They have to report. Okay, so now from ABC Limited, now when we're talking about the reporting company, means the company that we are concerned with. In ABC Limited, who is the shareholder? In the shareholder will be whom? So we'll come to know it is XYZ. So what is happening? We don't know who is the real person holding, because ultimately it is also held by an artificial person. We want to know, go behind to know who has control, which individual person, and when I say person, mean not artificial person, which individual or natural person is actually holding the company. So when we look into this, in ABC Limited, who is a reporting company, will report XYZ as their shareholder. But we want to know who is the owner of this artificial company also. So we go behind and we go to look, and then we will say, listen, Mr. A is a SBO, significant beneficial ownership. A significant beneficial ownership, one, can only be an individual natural person. Now, this natural person controls a company, because he's holding more than 50% in XYZ. So he's having controlling stake in a company, which allows him control of 10% or more in a reporting company. Then this person will be called as SBO. So what are the thresholds that ultimately, if it is 10% or more, okay, if this individual through any of his companies, through any of his holdings, if he is getting 10% or more of the reporting company, then it will be called as a SBO. This 10% is there. Right now it has been declared in the act. They have said 25% or any other number which the government may want to put. So they have put 10%. So in the act maybe it will be written 25%. But they have also written 25% or any other percentage as they will mention. So the percentage mentioned is 10%. So now let's look. First we will look into the concept. What is the concept? Is to identify natural persons who control the or influence the company. We want to know who is the natural person who is controlling the company, but their names are not appearing in the normal routine register of members, but they are not listed as owners of the company, because owner will be your company. We want to know behind who is the real owner. So in Hindi you can call it who is the pappu ke piche papa kaun hai. Okay, who is the real owner behind this person? So here we look into indirect holdings, because normally in order to control and you don't want your name to be disclosed, you will hold it through a web of companies. So I will try to indirectly try to control with the help of certain artificial entities. The identification process is to ensure transparency and accountability. Law is not saying that you are wrong. Wrong is saying you can absolutely hold it through web of companies. There is nothing wrong. Disclose. So for this they have disclosed that you have to inform in Ben 1. The individual will inform the company in form number Ben 1 that listen, I am having a significant ownership through these list of entities. Clear? Now coming here, now you tell me who is the person. Now reporting company first we'll catch. Let's say I'm talking XYZ is the reporting company here. Sir, what do you mean by reporting company? Means the company in concern. Reporting company. Right now for XYZ Limited, who is the shareholder mentioned in the books? So XYZ in the normal company law situation, we will say listen, XYZ 11% is held by ABC Limited. So the 11% is shareholder, it will be there, but we want to know who is the pappu ke piche papa, who is the behind this company, who is there, then this company comes in. No, we want natural person. So we'll go behind this, who is the controller here. So this guy who is a natural person, so he was holding more than 10% through a web of companies. So we want to know who is the ultimate significant beneficial ownership who is held by him. So he will be treated as a SBO, and since Mr. A is a XBO in the reporting company XYZ, he will have to give a declaration in form Ben 1 to the company. Clear? In 2024, there was a penalty on Satya Nadella, okay, Microsoft CEO. What happened is, if you know LinkedIn where it's for professionals, they are trying to look for a job. LinkedIn was there. It was taken over by Microsoft. So earlier the founders of in approximately 2006, Microsoft took over LinkedIn. They paid the particular founders around 26 billion, all for cash deal. They took over. Now in LinkedIn books who are operating in India, the shareholder is Microsoft. But we wanted to know who is the person behind Microsoft. So here, let's say Satya Nadella, okay, had majority stake. So he becomes the significant beneficial owner. But none of these declarations came under section 90. Microsoft did not disclose that who is the shareholders who are holding more than 10%. This So a penalty was levied on Satya Nadella for violating the SBO norms, for not making the significant beneficial ownership declarations. Now the question is, why like this? What is the purpose of introducing this? Because many times a person wants to hide behind the company corporate structures. So to combat financial crimes, one, to create more corporate transparency, to bring in more accountability. We'll come to know, listen, you are the person, you run it properly, and we can, with the knowledge of the true owners, we can make them accountable. And lastly, it is a international practice to do this. So implementing the SBO with the SBO rules is an international practice. Till now, sir, you haven't told the section. Yes, I haven't gone into the section only, nor I have gone into the rules. Till now, I have just explained you the concept. Now let's get into the section, what they are saying. Section 19 talks about a register of significant beneficial owner in the company. You have to read it with the significant beneficial ownership rules 2018. Okay, now we are seeing rules will be of significant SBO rules 2018 and company law section. Let's look at it. So very simple. First, I have already explained what is given in section 90 subsection 1. I have explained about Ben 1 form. What is Ben 1? Individual who has significant beneficial ownership. Sir, what do you mean by significant beneficial ownership? The definition is given under Rule 2H of the SBO rules, which I told you 10%. We'll see what all criteria has been given. Coming back, section 90 subsection 1 says that every individual who is an SBO shall file form Ben 1 to the reporting company within 30 days of acquiring such ownership or change therein. So these forms are always either if you are acquiring or if they are changing your ownership status, selling, etc. That also you have to file in the same form. Clear? Yes. So first, section 90 subsection 1 is talking about Ben 1. Who has to file? You see the word very clearly. They have not said every individual, every person they have not used. Because individual is always a natural person. Every individual who is a SBO has to declare it in Ben 1 to the reporting. Now we come to significant beneficial ownership. So individual holding SBO has to declare. Now when will I be said that I have a significant beneficial ownership? So let's see. SBO 2H. Okay, remember 2H. An individual. See the words that they have used. An individual who either acting alone or together. Now how can you act alone or together? I will explain. Okay, who is acting alone or together with maybe another person, another relative, okay, or with two partners of the same firm are also trying to acquire. So acting together through one or more person or through trust, possesses the following rights or titles in the company. So firstly, who is a significant beneficial owner? It is an individual who is acting alone or together, possesses the following rights. Now what are the following rights? Let's see. I had already told you 10%. But 10% of shares, 10% of voting rights, 10% of dividend or any other means. See, holds not less than 10% of the shares, not less than 10% of the voting rights, not less than, that means at least 10% of the dividend he is getting, or exercise significant influence by any other means which is there. But one line they give you before this, so we understood one thing, that you're holding 10% of shares, voting rights or dividend. Clear? Or dividend. But they are saying holds indirectly, holds indirectly, holds indirectly. Now see, indirectly means what? See what they're saying? Holds indirectly or together with direct holdings. Means he's holding indirectly or with direct holdings. Sir, please explain. Now I'll explain you what is indirect holding. What all above we did was indirect holding only. That he didn't hold it directly in the company. He held it with the help of another company he held. So that is indirect holding, which I am going to explain. Okay. First, let's learn what is given in the section. What are we learning? What is given in the section? Let's see. They've said SBO is an individual who through one or more person has the following rights in the reporting company. Holds indirectly, that means directly he's not holding, he's holding indirectly, means through an entity, he has invested in an entity, that entity is holding in the company, or together with direct holding, which I'll explain, 10% of the shares, voting rights, dividend, or hold significant influence by any other ways. Sir, now let's explain that part which they had said, direct versus indirect holding. I'll ask you a question and you tell me whether he is a SBO or no. Now logic I have told you, apply your logic and tell me. This is a direct holding. Okay. This is a direct holding. Okay. Now you tell me, Mr. A, he is holding more than 20% shares in ABC Limited. Will he be treated as a significant? He has direct holding. Directly he holds 20%. Is he a SBO? Yes or no? Is Mr. A significant beneficial owner? He is holding more than 10% what? Shares. Holding more than 20% shares in ABC Limited. Is he a SBO? Does he have to do Ben 1 form reporting? Tell me quickly. Apply your mind. Apply what the logic I have told you. So the answer is no. He is not a significant beneficial owner. Sir, why? Because he has crossed the 10%, but that is not the criteria. It has to be indirect holding. He is holding direct. That means in the books of ABC Limited, Mr. A is mentioned as a shareholder only, na? So question of indirect holding and web of security is not covered only. Transparency is always there. In Mr. B, ABC's Limited, Mr. A will be a shareholder. Where is the question of hiding anything or to find out anything? Nothing. So in direct holding, if a person is directly holding, then he's a shareholder. It is already known. There is no question of any disclosures. So Mr. A is holding 20% shares in direct holding. Does he require to give? Answer is no. Only direct holding are covered. Some amount of indirect holding is required. Some amount of indirect holding is required. Clear? Mark this as important. What it means also I will explain, that he is holding through a web of company, that has to be there. Then only it is there na, that you are not coming to know through the normal direct means who is the shareholder of the company. Okay, let's see indirect holding, what I'm saying. Okay, now this above example what we was done as of indirect holding, we'll see then a mixture also, direct and indirect holding is also covered. So indirect holdings, you tell me whether Mr. A has to give, is Mr. A beneficial owner of ABC Limited? Reporting has to be done Ben 1 forms. Answer is yes, because he has a indirect holding. How? Through another person. So whenever you hold it through someone, it is called indirect holdings. So yes, Mr. A, is Mr. A a significant beneficial owner? Yes. Clear? Now we'll see a case of mixture, acting alone or together, what they had given. Remember, they had given one line, you are holding, you're acting alone. Alone, if I'm holding indirect, I will come. Now I'll see you're holding to alone or together with someone else. You all can still be counted as a SBO. Let's see. Here, direct and indirect holding, which is talking of joint holdings. Now pay attention to what I'm explaining. Okay, very, very important. So this is very, very important. Now what is happening? Mr. A is holding directly and indirectly. Now you have to tell me whether he is a significant beneficial owner or no. Mr. A holds direct holding of 6%. Direct holding of 6% of ABC Limited. But Mr. A is also holding majority shares in XYZ Limited, who is holding 4% in this. So now can I say that Mr. A is a significant beneficial owner of the company? Yes or no? He is holding directly 6 and indirectly he is controlling a company, and that company is giving him control of 4%. So in total, when I see direct holding and this is indirect holding, direct and indirect if I'm doing, and I'm getting 10% or more. So yes, is this? Yes, he is a significant beneficial owner. Clear? So can I say that some amount of indirect holding is required? Okay, some amount of indirect holding is required, because only then that question of non being transparent and transparency occurs. Direct holding, so we would know now that you are the shareholder. Here only question eyebrows are raised that listen, he is holding through someone also. Now, so that is the time. So direct and indirect holding can be there. So again, now you tell me, if I am holding indirectly 10%, am I a SBO? Yes. So whether I am a SBO, answer is yes. If I am holding directly 10%, answer is no, I am not an SBO. Because in SBO it is something where someone is hidden. You're directly holding shares, so we know you are the shareholder. If I am holding directly, how do they word it? That if a person is holding indirectly along with certain direct holdings, direct holding, that will also be covered. So I am holding direct 6 and indirectly 4. So then I am still an SBO, and then once you are an SBO, Ben 1 form has to be filed. Clear till here? Now, very, very important, just don't get confused, okay, with what I'm going to say. That when they say 10%, now pay attention to this. Okay, now pay attention to this, what I'm saying. Okay, now in this case we believe that he was he has 10% stake. Now pay attention, this is something very technical I'm going to tell you. Okay? It is very technical but not needed to know, but still for conceptual clarity it is very much needed. In this example, where Mr. A is holding more than 50% shares in XYZ, and XYZ is holding, let's say, 10% shares, 10% shares in company XYZ. So is Mr. A SBO? Answer is yes, because 10% or more is covered. So Mr. A is SBO. Why? Because he's holding 10% or more in reporting company through another entity. Now, what is a technical point? That sometimes, okay, sometimes someone can say that, listen, he has 50% shares here. He has 50% shares in XYZ Limited. So when XYZ is holding ABC Limited 10 shares, he can control only 5%. See, Mr. A is holding 50% shares of XYZ, and XYZ is holding 10% of ABC Limited. So that means XYZ 50% is by Mr. A and 50% is by others. So this guy is having 50% stake here. That means he has only 50% control of all the assets. So he will have only 50% control of this also, 5%. But that is not what we are taking. Okay. So don't get that don't do further division. Just see that ultimate indirect company, how much holding is being done. That is the basis to decide whether he is SB or no. You don't have to go into A's actual control into ABC, because if you go to see, he's holding 50% and here it is 10, so he's holding only 5. But that is not the correct calculation. The correct calculation is to see this part and then decide whether he's SBO or no. Clear till here? Now moving forward to the next part, where they had said, listen, the third case is if he is holding 10% of shares, voting rights, or shares, voting rights, or dividend. And fourth, they had said he is holding significant influence by any other means also. So how is that significant any other means? So always we say control is by, if you have a right to control the policy decisions, we will say that you have a significant influence. So you have a right to participate directly or indirectly in the financial and operating policy of the reporting company. Okay. Then it will be said that you have a significant influence in the company. Now, simple, done. So if I'm able to control the financial or operating policy, this is the keyword. Now let's get into this again, and let me ask you a question further, okay? So the question is that they have said that if I have to report, if I'm holding what? Shares, right? See, here. When we are done rule 2H, I have explained you what is the meaning of individual. I explained you how you can act alone or together. That also one example will come. Okay. And you're holding 10% of shares. Here also they have told you of shares, and dividend also on shares. Clear? So the question came that what do you mean by the term share? What is shares? So shares, they say, listen, share includes equity shares and compulsorily convertible equity shares as well. And they also cover GDR, Global Depository Receipts, which are also shares but issued to abroad shareholders. That is called as GDR. So what is GDR? GDR is shares issued, equity shares issued to foreigners. We call it as GDR, but concept is shares only. So let's see. Now we are going into the technical aspect of what do you mean by the term share. Now, And shares also, they say that any convertible, compulsory convertible, see, when they say that you're holding 10% of equity shares every time, so the instruments could be compulsorily convertible debenture or preference shares. So it could be your CCPS or it could be your CCDs. Since they are compulsorily getting converted into equity, that means you are ultimately going to be a shareholder. So that is to be counted to determine whether you are going to be an SBO or no. And lastly, global depository receipts also. So these are nothing but shares issued to foreign investors. So these are ultimately shares only, na? So if there is a foreigner, we have issued to Satya Nadella, or to a foreigner, GDR will issue to them. So that is also to be counted whether you have SBO criteria or no. So it shall be treated as shares. So let's do a technical example which I think is very, very important. Okay. So this is very, very important. Now pay attention. What we said, shares includes compulsory convertible security. Simple line. Shares includes compulsorily convertible securities. So let's see. Capital structure of ABC Limited comprises of, the capital structure of ABC Limited comprises of 10,000. Now this is a calculation which will be done. Okay. So I want you to just sit with a calculator right now. 1,000 equity shares of 10 each. 1,000 CCPS. Okay. That is compulsorily convertible preference shares. Okay. And each being converted into 2 equity shares. So each CCP will be converted into 2 equity shares. Okay. This is the capital structure of ABC Limited. Now ABC holds 11% of XYZ Limited. Okay. X holds 400 equity shares and 600 CCPS in ABC Limited. Whether Mr. A is a SBO or not of XYZ Limited. So to understand anything, you have to first draw the diagram. So let's see here is a diagram. If I go to see, this is ABC Limited's capital structure. So this is ABC Limited capital structure. They are having 1,000 equity shares and 1,000 CCPS. That is, one each CCPS will be converted into 2 equity shares. So can I say this is 2,000 equity shares? So we'll say ABC Limited has total shares how much? 1,000 equity and 2,000 equity shares for CCPS. Now because 1 will be converted into 2, so 1,000 will be converted into 2,000. So ultimately they have total shares, how much they have? Total shares are of 3,000. Okay. Now ABC, I'm just reading and simultaneously writing. ABC Limited holds 11% in XYZ Limited. So ABC Limited is holding how much percentage? 11% in XYZ Limited. Okay, done. In XYZ Limited. Now we are seeing X, Mr. X. Now we come to Mr. X holds 400 equity shares and 600 CCPS in this. So if we are taking Mr. X, I think this is Mr. X. Mr. X shareholding I'm seeing now. He is holding how much? 400 equity shares and 600 CCPS means what? He is having 600 means into 2. 1200 he is having Mr. So he'll have 1600 equity shares, because these are equity shares, again it is convertible CCPS. So out of, so Mr. X is holding 1,600 shares divided by 3,000 shares into 100. This will be his shareholding. right? He is holding 400 and 600 CCPS, which is 1200. So he's holding 1600. So now you'll take your calci, and then you'll do 1600 divided by 3000 into 100. So he is holding 53.33%. So Mr. X is holding 53% of ABC Limited, right? Because only one thing I have done. I have included shares and convertible equity, includes compulsory convertible equity share. The ratio they had given you for one CCD, you will get 2 equity shares. So accordingly, I did the calculation. Now I come to know Mr. X is controlling majority stakes of ABC, and ABC is controlling XYZ more than 10%. So therefore, Mr. X will be a SBO. See how they have explained. First, they have calculated Mr. X post conversion calculation they have done. They have said 1600 equity shares, and post conversion of ABC we also come to know what is the total shares. So out of 1600 he is having, out of 3000 equity shares he is having 1600. Therefore he is holding majority stake in this company and in ABC Limited, and ABC Limited is holding 11% in XYZ. Therefore Mr. A. So I mean that is why he is a SBO and he will have to file Ben 1 form. Clear? That is done. Now we look at certain business structures. Okay, very interesting, where they had told you along with anyone. Now you along with anyone. So now we'll have to see I with my partner, I with my wife, I with my private company are also coming and holding shares. So that will also be counted. Okay. So let's take an example. Remember this, that control, when we are saying control exerted through someone, remember there was, I said you with someone. Now HUF, trust, LLP, investment pool is also considered for SBO declaration. Let's see. So HUF, in HUF who is there? Karta. So Mr. X is the Karta. Mr. X is the Karta. He is the Karta of HUF, and HUF is holding more than 10% stake in any company. So Mr. X, the Karta, is a SBO and will have to declare the in Ben 1 form. So what is happening is I am holding through someone, that is through a trust. Earlier we always saw that a company is controlling a company. Now it is a trust or it is a HUF. Second example, Mr. X is there. He is a trustee of this trust, and this trust is holding ABC Limited. So we saw that, listen, earlier this used to be a company. Now we are seeing it is another structure, business structure. So what is the artificial entity? We have to see who is the natural person. So Mr. X shall be a SBO and shall file Ben 1 forms. Next, me with my wife, me with my partner. So let's say Mr. X and Mr. Y are partners of a partnership firm. Mr. X is holding some shares and Mr. Y is holding some shares, having a control over A and B company, and this company is holding 10% or more stake in the reporting company. So both of them will become a significant beneficial owner and both have to file Ben 1 forms. Now same, another example is ultimate holding company. What do you mean by the ultimate holding company? See, you can have a holding company, you can have a holding of that holding company, then you can have that holding company. Means, can I say in C Limited, who is the holding? B Limited. For this holding company also there is a holding company called as A Limited holding company. So the holding company which has no further holding companies is called as the ultimate holding company. The ultimate holding company. For example, if I go to tell you that there is Tata Consultancy Services, it is the holding for Tata Elxsi. Okay, Tata is for Tata Elxsi. It is a company of Tata's. Elxsi, some company it is there, Tata Motors. So this TCS is the holding company for this. So if TCS is also controlled by Tata Trust, okay, or any other entity, then this will be the ultimate holding company. Okay, if I'm saying this is a private company, then this will become the ultimate holding company who doesn't have a further holding. So in this case, A Limited is held by X, Mr. X. There is no further holding. So this will be called as the ultimate holding company. Why am I saying? Just for the knowledge sake. In this we have to understand Mr. X is controlling this one, this is controlling this one, this is controlling this one. Okay, and this has 10% stake in the reporting company. So yes, Mr. X will be a SBO and has to file Ben 1 forms. Here also now it is getting simpler. The more you understand, the better it is. It might not be a company, it might be an LLP also. So still it will be covered. Mr. A having a controlling stake in PQR Limited, then comes a company LLP, and then the LLP is holding another LLP, and then this is the X Limited. So ultimately this is a entity, this is the artificial entity, this is artificial entity. This becomes the significant beneficial owner who has to file Ben 1 forms. Finish. Now some important conditions which I have already discussed, but you can keep a note of this. 1. For significant beneficial owner, should be a natural person. 1. He should be holding indirectly alone. Indirectly he must be holding, then he is a SBO, or directly with indirectly, or directly plus indirectly. Indirectly has to be there. If it is a direct holding, SBO forms do not apply because his name is mentioned directly only. Holding not less than 10% or significant in the reporting company. Only direct holdings are not considered as SBO. So all this we did for subsection 1 read with the rules. Now we will see the other Ben forms also. It is very simple. Once the SBO, okay, once the individual, he will inform the company. Now pay attention to all the Ben forms. I'll tell you in short now only. That individual will file in Ben 1 form if he is a SBO. Now company will have to report it to the ROC within 30 days in Ben 2. In Ben 2 of all the details, they will give you the return of SBO. Here there will be the declaration of SBO. Then company will maintain a register of SBO in Ben 3. In Ben 3 a register will be maintained. And in Ben 4, if a company feels, okay, company issues notice to person that listen, I feel that you are a significant beneficial owner but you have not made declarations. So Ben 4 form will be done to ask a person that listen, I feel I am doubtful that I think that you are, if a person identifies that this person is a SBO, okay, he is holding the shares through his web of companies and he is not declaring, then company gives a notice to this person who they believe to be a SBO in Ben 4 form. Simple. Ben 1 is declaration, Ben 2 company informs ROC, Ben 3 register is maintained, and Ben 4 if we feel that someone is there who is not disclosing, we will ask Ben him to reply. Now let's see. Section 92 to section 94 read with rule 4 and 5, register and returns of SBO. Rule 4, return of significant benefit ownership. So very simple, as I told you, where any declaration is received by the company, it shall file a form in Ben 2 within 30 days from the date of receipt of the declaration. Ben 2 over, now we are coming, so Ben 2 is over. What was Ben 2? Company informs ROC. In Rule 5, register to be maintained. Then the company will also maintain a register, okay, and anyone wants can come and inspect the register. Now Ben 3 form is also done. It shall be open for it shall open for inspection during the business hours, at a reasonable time, working day. They have told how much is the maximum charge they can do. Section 90 subsection 4 says company to identify an individual who is an SBO. Company to identify an individual who they feel is an SBO. Every company shall take necessary steps to identify an individual who is a SBO. So company should also take steps, as I told you in section 94A. In section 90 subsection 5, they are saying you have to give Ben notice to the person who they believe is a significant. A company shall give a notice in Ben 4 form to any person whom the company knows or has reasons to believe is a significant beneficial owner. Or if the company feels that this guy knows who is the SBO, they can even catch a person who might have the knowledge of the identity of the SBO. They can give a notice to him also, and to have been given a significant beneficial ownership any time during the 3 years immediately preceding the date. To have a significant beneficial owner of the company at any time during the 3 years immediately preceding the date on which the notice is issued, and who is not registered as a significant beneficial owner. So section 90 subsection 5 is saying a notice seeking notice seeking an update whether you are an SBO or no shall be given to the significant beneficial owner directly, or to a person who they believe has knowledge or have been a SBO. So if any person is an SBO from many years back, okay, immediately 3 years back he was an SBO, but he might be have a knowledge of any other SBO. For example, I was holding 10%, I sold it to someone else. So they are saying that they can even catch past SBO if they feel that they have knowledge of the new SBO. Okay, who are not registered with the company as SBO. Now when they give the notice, the concerned person should reply within 30 days of the notice. Okay, if we don't receive a notice, if we don't receive a reply, or we receive an unsatisfactory reply, not satisfactory, then we will file to NCLT, and now you will imagine what can happen with the shares. This is very dangerous. That if we have issued a notice and he has not replied that listen, I am genuine, if that is not done, then we will file to NCLT. Who will file? Company will file NCLT that listen, this guy is there, we don't think anything is genuine, and if this guy doesn't come forward, we will freeze his shares, take away his shares, take the money, block his shares, and transfer the funds to a IPF. See what will happen. We will initially block all his rights on the shares. The reporting company shall. So this is a very dangerous, heartbreaking thing for the SBO. The reporting company shall, where the person fails to give to the company the information regarding required by the notice in Ben 4 within the specified time, or in how much time has been given, he has to reply within a span of 30 days he has to reply. So when 30 days no reply is there, or no satisfactory reply is given, then they will apply to NCLT within 15 days of expiry of the said period. Okay, And why will we do? For an order directing that the shares in question shall be suspended of all the rights attached to the shares. Imagine such a dangerous provision that your reporting company shall apply to the tribunal for an order directing that the shares be suspended of all the rights attached to it. Gone shares. Then tribunal will pass an order. On application, a tribunal may give an opportunity being heard and pass an order within a period of 60 days of receipt of the application. So in 60 days, they will also give a reply. NCLT will pass the order. So everything is happening very, very fast. In 30 days, you have to reply. Otherwise, they will go in appeal within 15 days. And once they go, then they'll go to NCLT, who will pass an order within 60 days. Now imagine if a beneficial owner has legal funds, the source of the funds are known, genuine, then he can come and apply for recovery, yes or no? So the answer is in section number 90 that the company or the person aggrieved by the order may make an application for relaxation or lifting the restriction, but within a period of 1 year from the date of the order. Now pay attention, what is happening is 1 year period we are ready to wait. 1 year we can wait. If after transfer, okay, after blocking, after NCLT order for 1 year, if no application has been made, then the share shall be transferred to Investor Education Protection Fund. Okay, and IPF authority who regulates the fund will manage it. So your shares are gone permanently, then you can't recover. So you get 1 year time to come forward. Now however, there are some rights to recover from IPF also, but for SBO non-declaration, those rights are also said that you can't do once it has come here. So within 1 year from NCLT order, the SPO has to come with all his income proofs. The central government may make an order for the further things, and they might put a penalty also to any person who is given a false or incorrect information, including the professional under section 447. So these are the penal provisions which have been mentioned. So Ben 1, 2, 3, 4 is clear. Declaration, company informs ROC, then register, and Ben 4 is about notice by company to a person who is believed to be an SBO of the company. Explanation we've done, who is a significant beneficial owner in section 2H in depth. Explanation, who is not an SBO. If an individual does not hold any rights, he shall not be considered as an SBO, simple. Okay. So your section 2H has few explanations to see. Explanation 1 is not an SBO. If I am not holding any interest directly or indirectly, then I will not be considered to be a SBO. Second, direct holdings. If I have direct holding, an individual shall be considered to have a direct holding if he satisfies any of the following conditions. The shares are held in his name. The individual acquires beneficial interest under section 19. 89 also there is a declaration. If all those declarations have been made, then I will not fall under this category. It will be considered to be a direct holding. Because direct holding always is because since company knows about the real owner of the company. Real owner of company. Concept clear? So this is also direct holding, or maybe if I have given a declaration in section 89, so it will be treated as direct holding, and therefore the SBO rules will not apply on me. Then explanation 3. So we have done this direct holding, which I had explained. Indirect holding, either through a company, through a body corporate, through a trust, through a LLP, anything I can hold. So an individual shall be considered to hold a right indirectly if he satisfies any of the following consideration. Where, remember, everywhere I had given 50%. He is holding 50% and then they are holding more than 10%. So that is why they said majority stake. That is why I used to give 50% example only. So where the member of the reporting company is a body corporate. Reporting company's shareholder is a body corporate. And the individual is holding majority shares in that body corporate. So it will be said that yes, I have indirect holding. HUF also same example. Partnership also, if you are holding majority shares or partners are collectively holding. Trust also, if a trustee is holding or with the help of a beneficiary or author of a trust, all the three, either the main settler along with the trustee is holding shares, Ratan Tata and the trustees are buying, so they will all be said through trust form also you will have. So these are all indirect ownerships that we are seeing. So you with the trustee, you with the all of this are collectively holding. When the members of the reporting company is member of a reporting company, so we have a reporting company, it is held by a investment pool, a body corporate, either partner, manager, etc., CEO. So your member of the reporting company is a pooled investment vehicle. For example, if you know REITs, it's a pooled investment vehicle, or mutual funds, it's a pooled investment vehicle. Okay. Here, an individual shall be considered to hold a right indirectly in the reporting company if he satisfies any of the company in respect of a member of the reporting company. Whether member of the reporting company is there and he has majority stake here, okay, or he is buying along with them. Now, explanation number 4, non-compliant jurisdiction reporting. Let's see. Where the member of a reporting company is a pooled vehicle, an entity controlled by this and is based in a jurisdiction which does not fulfill the clause under explanation 3, okay, then it shall apply. Simply stating, we'll see here explanation 5 also, acting together in control with the reporting companies. If any individual, okay, whether acting individually or through a trust with common intention to hold significant influence in the reporting company through an agreement or otherwise, shall be deemed to be acting together. So me and my wife. So I've given the examples in form of structures, it is much easier and all these explanations are covered. Next, explanation 6, classification or specific of instruments. So shares includes all kinds of convertible securities also. And when we say majority stake, if you're holding majority stake means more than half or more than half. And that is it. We've covered the entire provision of your significant beneficial ownership. Okay, clear till here? Now we have done till section number 90. Okay, now till here I want you all to tell whether you all have understood everything clearly, yes or no. Till here you all have understood everything clearly, yes or no. Then after this we will be starting with the general meetings topic also. Right now all these are also sure to come. Okay, now till here have you all understood everything clearly? Okay, Tharini, great. Others also please reply. Perfect. Witty Fox, nice. So the explanations are also there, but I have explained everything in my previous this also. Okay, crystal clear. Great, Akshay. Let's start with your next section. Section 91 and then 92. Hi. So we'll be starting with a topic called as book closure and record date. Now let's understand, every single company is permitted by company law to close their register of members book. Now question is, why would they close it and what are the provisions with respect to that? So the provisions for closing of register of members or debenture holder or other security holders is contained in your section number 91 read with rule number 10. It tells you that, listen, you can close the register of members, you can close these registers, and three timelines you need to remember: 45 days, 30 days, and 7 days. Three timelines that in a particular year you can close it for 45 days. Maximum time period in the entire year collectively you can hold it, close it for 45 days. At one particular time, in one go, you can close it for max 30 days. And before closing the register of members, you have to give a public advertisement 7 days prior, so that all the members come to know. So now 45 days is in a year, maximum 30 days at a time, and before closing 7 days prior, public advertisement needs to be made. Now, first question is that why would a company close? So normally if you go to see in online trading, continuous people are transferring the shares. Now if I have to decide who to give the dividend, if the company has declared some corporate benefits like dividend, bonus shares, right issue, so they will have to see in the register of members who are mentioned. If it is a continuously fluctuating book, names are continuously being moved because trading is happening so fast. So that time they will say, listen, we need to close the register of members. That time no transfers will be done. On that day, whoever's name are mentioned when we close the book, whoever names are mentioned on that day, we'll call it as a record of the book closure date. All those members will be entitled to the corporate benefits. Simple. So the main purpose of closing the books is to find out the register of members. Sometimes for tallying also you can close the members. So let's read. Company close their register of members for updating the records. So sometimes they have to update the records, okay, especially for corporate events. To whom to give the notice of the meeting? So they will say on this date, whoever names are mentioned, we are closing the book. That time no transfers will be done. Whoever name is mentioned on that day will be entitled to the corporate benefit. So this is the line. Security holders whose names appear on the book closure date are entitled to the corporate benefits such as dividend, bonus shares, right issue, etc. Okay. I told you, period of closure of books 45 days, 30 days and 7 days. What they have given, a company may close the register of members for any period not exceeding 45 days in the entire year, but not exceeding 30 days at one time. So 30 days in one time maximum. Then again I can close for some time, but collectively cannot go more than 45 days in a year. Notification, I told you, a company before closing the register of members must at least give us 7 days advance newspaper advertisement, so that everyone comes to know that, listen, the share dividend can be declared on that day, so I will try not to sell my shares if I want dividend. The advertisement must be given in two newspapers. One is in a vernacular medium newspaper and the other one is in an English language newspaper. The company must also ensure that the notice is published on the company's website. And that is it. This is the provision for closing the register of members. So now we are getting into section number 92. Again, our favorite examiner question. Okay. So annual returns we'll start. It is very, very important. So till now, section 88 till section 92. 91 was closure of register of members and now it is annual returns. So we'll start with annual returns provision. Hi. So now we'll start the provisions for annual returns given in your section number 92. So what are annual returns? Let me ask you the question first. Do you think the annual returns will contain how many times is an annual return distributed among the shareholders, or how many times it is made in the year. Sir, from the name only, I can tell that this return is made annually, that is once a year. So annual return is a mandatory document that the every company has to file with the ROC annually. So every single company, private, public, listed, every year they have to file the annual return. What is the objective of the annual return? See, financial statements are very detailed and it will contain only financial aspect. We need a return. Return means information, or information which is given to the shareholders and registrar about the financial as well as non-financial. So financial highlights and non-financial major events has to be reported. So annual return will let the company and the shareholders and the ROC know what were the major things that has happened with respect to finance and non-finance. So again, okay, it gives an idea over the overview of the company's organizational structure, the operations, the accountability, etc. Now, a financial annual return contains both financial as well as non-financial information, unlike financial statement which only contain financial performance. Companies are required to file this once every year within 60 days of holding the annual general meeting. So very important, the timing also. In AGM, the annual general meeting is placed, it is approved by everybody, and moment the meeting is done, the approved annual returns is filed with the ROC. Within how much time? Within 60 days of annual general meeting, making it an essential part of a regulatory compliance and corporate governance. What is the objective? As I told you, the basic purpose behind filing annual returns is to provide annual information. So annual returns actually gives them annual information with respect to the company, their promoters, who left, who came, what was the remuneration, everything to the registrar, to the shareholders, to the stakeholders. Now, this was the concept of annual return. Now let's get into the section. Now section 92 read with rule 11 talks about annual returns. Section 92 read with rule 11. For annual returns, you have your MGT 7 and MGT 8, which is very important. Let's see. Section 92 subsection 1. What does it say? That every company shall file its annual return in MGT 7. So annual return is in which form? In MGT 7. For OPC and small company, they will file annual return in 7A. Foreign company will file the annual return within 60 days only from the end of its financial year to the ROC in FC4 along with the fees. So very simple. So 7 will be all companies, small and 1% company will be in your 7A, and FC4 will be for foreign company annual return. Concept clear? So is the forms clear? Every company shall file its annual return in 7, 1% small company in 7A, and foreign company in FC4. Okay. Now what all will the annual return contain? Now almost everything they will contain, whatever is important. Details about your companies, your everything, holding, subsidiary, associate, shares, debentures, shareholding pattern, members, promoters, meetings, remuneration, penalty if any imposed. Okay. Compliances whether done properly with respect to FIIs, any other matter. But so disclosures are there, but the most important part is here. And you will see the importance of company secretaries in your annual returns, which is an annual compliance. So every company, in order to get to sign the annual returns, require a signature of company secretary and director. So again, signing of annual return, it is done by whom? By director and CS. And where the company has no CS. Okay, let's say if it is a private company, not required to keep a CS, but still they have to go from a CS who has a COP number, certificate of practice, who is not in job, but at least who are these secretarial firms are there, they can do it. Okay, in case of one person company, we say okay, fine, CS requirement is not there. And small company, annual return shall be signed by the company secretary, one company secretary, or if there is no secretary, then the director of the company. So for one person company, for OPC and small company, either it has to be CS, or if not CS, then the director of the company. Clear? So very, very important, signing of the annual return. Now, if certain thresholds are crossed, that is, if the annual return is for listed companies and for companies having paid up capital of 10 crores or more, or turnover of 50 crores or more, have to get a certificate, shall be certified by company secretary in practice in form MGT 8. Very, very, very important. With this, we are doing section 92, subsection 2. That listed companies and companies having a paid up capital of 10 crores or turnover of 50 crore rupees. Both these companies who have listed companies and companies having paid up capital of this have to get their annual return certified by PCS. In which form number? In MGT 8. Clear? Very, very. So 10 crores and how much? 50 crores. 10 crores and 50 crores, every listed company. So they will have to engage a PCS, tell the PCS, this is my annual returns, you clarify. Okay. In that, the PCS will look whether all the details are correct and accurate and everything has been properly disclosed. Now, subsection 3, 92 subsection 3, that every company shall place a copy of the annual returns on the website. And in the board report also, they give you a web link where you can, or maybe a barcode will be given in the board report where you can go and read it. For example, a board report has come. In the board report also, they will give you a link, web link to the annual returns. Due date of annual returns, very, very, very important. Section 92 subsection 4 says 60 days. Remember, we are done with very simple thing. Within 60 days from the AGM. If the AGM was not held, then the last day on which AGM should have been held, disclosing the reason why AGM was not held. And where no AGM was held within 60 days from the date of the annual general meeting, then on which the annual general meeting should have been held, and also giving the reasons why annual general meeting was not held. So every company shall file with the registrar a copy of the annual return within 60 days from AGM, or where no AGM is held, within 60 days from the last date on which AGM should have been held. Then penal provisions have been given for not only non-filing to the company, and on the CS also, if he has given some incorrect information. Because now if PCS, you just come and a company without PCS, without going into the depth, just signs it, then you can also have penal provisions on them. Now we did section 92. Now we'll see section 94 and 95 read with this. 94 and 95. Very, very simple. What is 94 saying? That accessibility for inspection. Annual returns can be made available for inspection at no cost to the members. Just we saw that all these are financial documents. Your stakeholders are not only shareholders, debenture holders, everybody is a stakeholder. That if the company shuts down, who all will be affected? So any stakeholder wants, they can go and ask for the annual returns. Some charges can be there, they can be asked during at least 2 designated business hours each for a fee not exceeding. They've given you the amount also. Provision of copy, you want to take a Xerox copy also, you can do, and government can ask for immediate inspection up to them. Now, your copies of the annual return under section 94 shall be prima facie evidence of any matter authorized to be inserted therein or under. So these, whatever is given in the annual return becomes a evidence that such matters was told. So tomorrow, if there is any dispute, I will go into I can bring up the annual return and say, see, he had told that this thing was done, he was appointed, this was done, this notice was given. So that can be taken as evidence in court as well. So annual return is a document which will be prima facie valid when taken in court to express that any matter was directed by the BOD or told by the authorized by the BOD. That all we can show it in this. Now there is a concept called as UDIN, which is newly brought in. What is UDIN? Is a unique document identification number. What is UDIN? It is a unique document identification number. Now company, it's for CA, CS, CMA. Now for CS particularly, when they come in, they have to go into their members. They go to the UDIN website. Okay. On the UDIN website, they will log in with their membership ID and password. Then whichever document is there, which UDIN is required, like for example, signing of annual return requires UDIN. So I will take, when a PCS is there, I want to sign a annual return. I will go to the UDIN site, I will upload the annual return and I will sign there. I will get a unique document identification number. That unique document identification number shows that yes, this membership person has signed it, and this unique number I have to put on the document also, so that anyone can see, okay, fine, this is a specific number generated for this document and this PCS has signed. So all the data will come there. So let's read. As per ICSI Unique Document Identification Number Guidelines 2019, UDIN is mandatory for certain services of PCS. So whenever we are doing the annual return MGT 8, we have to go to UDIN and we have to get signed and get a unique document identification number and show that annual return, even MGT 7, MGT 8 both. See, MGT 8 is for the bigger companies when they have to go to PCS. Even that will be done. Even MGT 7, which is of a every time every company has to go, even that will be done. MGT 8 is certification by PCS. Even that has to be done. Then secretarial audit we are doing. CS again has to do this. Annual secretarial compliance for listed companies, which has been given. Also UDIN is required for all of this. Compliance certificate for corporate governance. So all these transactions or all these particular certification by CS requires a dedicated UDIN number. So I will type to the UDIN ID of ICSI, I will put my membership number, password, then upload these documents, sign, get a unique document number, and this I will attach this number, and then it will be said that the compliance is complete. So it is just a additional layer of security that CS has been put under. And similar thing is for CA and CMA professionals as well. So that is it. We've covered the entire provisions of annual return. Okay, done. Now we are going to start with your section 96 onwards. Okay, 96 is your annual general meeting. Till now everything that I have done is important. Okay, you should keep a note because you're doing it in order. All section 88, 89, 90, 91, 92, 5 sections I have done. Now I'll go in one go, which has 50 things, which will go till section uh Harshvardhan. Peer review is different. Peer means your friend. When nowadays what is happening, I'll tell you what. Harshvardhan, I doubt you have peer review in your executive level. But still, I'll tell you what is peer review, as you all have asked. So, ICSI, now pay attention, this is little off topic, but I'll tell you. ICSI has a quality review board. In order to ensure that the quality of CS is very good, they have asked peer review, where PCS who has 10 years of experience has to be registered, 10 years or more. They will have to be registered as peer reviewer. Okay, they will be registered as a peer reviewer. Then they will go to all these PCS and review these firms if they want to do secretarial audit, etc. That will be given. Okay, so peer review is my friend reviewing, my senior reviewing whether I have proper infrastructure, I have proper manpower, I have proper experience, and then it will be done. Okay, and that is when a PCS, if they want to get do secretarial audit for listed companies, peer review is required. So they will have to put a peer review number that, listen, I have been reviewed by XYZ senior, and he's saying that yes, I have enough bandwidth to do a secretarial audit of a listed company. Clear? That is it. Now we will start with general meetings and start from your AGM, EGM class meetings, but we'll take a break and then we will come back. Okay, for this, and then I will start with this and we'll complete annual general meeting, EGM section 96 onwards. Clear? Till here, I hope everything is clear. Okay, is everything clear till now? Now we'll take a short break, okay, of maybe just a lunch break, and then we'll come back and then we'll complete this part also. I think by 2:30 p.m. we return. Okay, so after lunch you can come back and then I will complete the section, all the sections in one go, because this is the last PDF left for general meetings. Clear? That is it. So I'll see you all at 2:30. Let's have lunch and then come back. Okay, Tarini, Vidya, great. Viti, Shubh, Sona, Akshaya, great. Okay, Harshvardhan, great. Okay. Now, also one thing is there, please, if you all have not enrolled for the Dream Batch, I believe everyone must have done. It's a huge number that I have already done. Please share or inform the Dream Batch links into your friend circle also. Okay, let them also join, because it will help them, because the last almost attempt for the old syllabus, new syllabus also, it is very important attempt for all of you all to clear. So inform them, it is very helpful. Blindly they can go for the Dream Batch. Okay, so we'll take a break and then we return with annual general meeting till the end. Okay, so this will be few hours I'll require, but then I'll complete. So 2:30 p.m. we return. Okay. Hi guys, am I audible to you all? I just need a confirmation. So right now in one go, we will finish the entire general meetings topic. Okay. So let's begin. I'm just waiting for your confirmation in the chat box. Okay. Great. Let's finish it. And I can assure you, once I have completed this, once I start, I will end when I complete the entire general meetings topic. Okay, first, so you need to keep your modules open. Wherever your modules are there, please keep it open. We will complete it together. And just keep a book and pen so you can note down the section numbers, subsections, and the key forms, everything. Okay. And after I have done, you will see that not a single topic is left out. There is nothing in your exam also that can come beyond what I'm going to teach you. This is a guarantee assurance because I have ensured that I cover everything. Okay, so let's start. So let's begin with the video. Okay. Where is my... Hi. So now we begin with the general meetings topic. Now, as we know that the general meetings sections are from your section 88 to 122. It is given in your chapter 7 of your Companies Act 2013. The forms are MGT 1 to MGT 15. The secretarial standards that needs to be complied when we while having a general meeting is SS2, and the rules are given in your Management and Administration Rules 2014. Now, very first thing is that in company law, the decisions to be taken are one by the board of directors. Now, for that, we have a board of directors meetings which are there. The board of directors are authorized to do certain acts for which they will pass a board resolution and do it. However, there are some resolutions, some topics, some businesses which have to be discussed at the meeting. So for that, we will hold a general meeting, that is a shareholders meeting. Now, when we see meetings, members meetings, it can be divided into three parts. One is your annual general meeting. Okay, every single company has to have one meeting in the year of the shareholders, which will be called as the annual general meeting. The section is given in section 96. Now, in a year, do you think having just one meeting will be sufficient? One AGM will be sufficient? Now the thing is, there can be extraordinary cases, there could be an emergency, there could be some immediate measures where we can't delay till the next AGM. So those we call in a EGM and discuss this. So what is a EGM? EGM are meetings of the shareholders which cannot be delayed till the next AGM. You would want to call it at a EGM and finish it off. And next is a class meeting. Now, class meeting, there are no separate sections. However, it is a concept that, listen, if a particular class of shareholders are there, a company can issue a certain class having differential voting rights at one point. They can issue preference shares. They are a different class of shares altogether, or shareholders. Or you can even have a creditors where I have taken a loan. So they will be called as class meetings where I will call only the people of that class. So this could be your preference dividend, preference shareholders meetings, because preference shareholders do not normally come in a shareholders meeting. In a EGM, AGM, that is only for equity shareholders. For preference shareholders, we have something called as a class meeting, that only when matters affect them we will call them. A class meeting can also be done for your creditors. If I have taken loan and I want to discuss some loan terms and conditions with them, I will call them in a class meeting. Now, let's understand what is a annual general meeting. Very, very important, examiner's favorite question. Now, the provisions for AGM, annual general meeting, are contained in your section number 96. The very first subsection, okay, first subsection says that every single company shall hold, every company, whether it be private, public, listed, unlisted, in a year they have to hold a meeting which will be called as the annual general meeting, and they will have to say that this is a AGM, okay, and specify this as their meeting in the notice also. So in the notice of the meeting also, you will see it will be written the annual general meeting for Tatas, etc. That AGM has to be mentioned. Now, for one person company, common sense, there is only one person in the company. Okay, in a OPC where there is only one person, the provisions of general meeting don't apply. Why? Because if he is the alone member, there is no question of sending it to multiple members. He'll be the only guy deciding. So for for OPC, provisions of general meeting are exempted. However, can you tell me that for OPC, can there be board meetings? See, general meeting, I understand member, there is only one. So no question of general meeting in OPC. But can there be board meetings? Answer is absolutely yes, because a OPC can have many board of directors. If there are more than one director, then directors meeting also has to be there, because he is the sole member, but he will have employees, he can have directors, many of them. Okay, that's fine. Now, the first thing is AGM has to be held once in a year. So when I say once in a year, am I talking of calendar year or am I talking of your financial year? Means I should take 1 year, I should hold from January to December or 1st April to 31st March, during that time. Think and tell me. So obviously it is always your financial year what we are counting. Okay, when you go to see the year definition also, they are taking a financial year. That is, when I'm saying it should be held within a year, means from 1st April to 31st March, during that time you have to hold one meeting. So now let's say if 1st April 2024 to 31st March 2025, this is the financial year for 24-25. This is the financial year for 2024/2025. During this time, I have to hold one AGM. Okay, company in a financial year should have one AGM. They'll tell you also when the AGM has to be held. Now, when I hold one AGM, the second AGM when I'm holding, I keep it after many days. Okay, where I exceed 15 months. 15 months. So law says, listen, don't do that. That between two AGMs, the time gap also they have given. The time gap between two AGMs should not be more than 15 months. So the time gap between two AGMs should not exceed what they have given. Not more than 15 months should lapse between one AGM and the next AGM. Time gap between two AGM should be maximum 15 months. So if I hold a AGM today, the next AGM should not be exceeding 15 months. It should be within 15 months. Very simple. So that we know that you're regularly holding your meetings in a limited span of time, so there will be good discussion over the meeting. Now, so first point is over, that AGM has to be held in a time gap between two AGM should not be more than 15 months. Now, next important thing is, listen, when should I hold my AGM? Like in the example above, I had given that, this is the financial year. For example, I understood that this is the financial year. Okay, it ends here. When will I hold the AGM? So my financial year moment it gets over, I get 6 months time. How much time I get? 6 months. Okay, from end of from end of financial year 31st March, I get 6 months time. So can anyone tell me today if Tata's all companies during a certain time frame get very it's a for company secretaries, for the directors, that time is the most crucial time, and that time they all are busy. So calculate, you will come to know that which is the month where, see, March, so from the end of the financial year, that is April, May, June, July, August, September. So by September end, 6 months from the end of the financial year, okay, by September you have to hold your AGM. Now this is for today's time, like Tata's, Reliance, etc. But for first AGM you get 9 months time from end of financial year. Concept clear? That for first AGM has to be held within how much time? First AGM will be held within how much time? Within 9 months from end of financial year. So you could say if December, right? September, November, December. So if you calculate 9 months, the first AGM will be held from the end of the financial year till the next 9 months. That you will see it comes till December. For subsequent AGMs, means after the first AGM, then that is there within how much time? 6 months from end of financial year. 6 months from the end of financial year, where if for any reason you require, okay, now whether you can get a extra time, okay, this is called as condonation of delay by ROC, is given of 3 months, is given is of 3 months only for subsequent AGM. Means extension of time is not allowed in 9 months. In the first AGM, no extension of time can be given. But in subsequent AGM, if I cannot hold it within 6 months, then I can apply to ROC to extend the AGM, and for another 3 months it can be extended, because you are already in first AGM, they're giving you extended time only. 9 months they're already giving you. Okay. So let's read what they have given you. Very important provision, that in case of first AGM, it should be held within a span of 9 months from the close of the first financial year. In any other case, that is in subsequent AGMs, it should be held within a span of 6 months from the close of the financial year. ROC may extend the time. Extension of time is allowed in any AGM other than the first AGM, means in first AGM is not allowed, and that the meeting shall be held in time not exceeding 3 more months. Clear? Now what they have told, this is very important. Okay, very important, that this is for listed companies. SEBI LODR regulations apply for listed company as per regulation number 44. When you will see now Tata's and all of Tata's, Reliance, Mahindra, all these listed companies, they don't hold it within 6 months. They hold their AGM within 5 months of the end of the financial year. This is extremely important. Many people don't know only. They always feel 6 months we have studied before in our 12th or previously. No, for listed companies, I'll read it. For the top 100 listed companies, okay, by market capitalization, they shall hold their annual general meetings within a span of how much time? 5 months from the close of the financial year. Plus, if you will see that normally how board meeting you can hold through video conferencing, annual general meeting also there is a one-way telecast. That means the AGM will be streamed live and any member wants to see can watch it. So one-way telecast is permitted. The member cannot speak and interrupt in the meeting in the telecast. It's not a two-way conversation. It's a one-way where you will be able to see. So see here, that top 100 listed companies shall provide a one-way live webcast of the proceedings of the AGM. So regulation number 44, sub-regulation 5 of SEBI LODR speaks about this. So please mention this, that regulation 44 sub 5 says of the top 100 listed companies have to hold their AGM within 5 months, not 6 months normal time. It is within 5 months of end of financial year. Now exemption, now this is also very interesting, and there are, sometimes they have asked in the exam also, exemption for AGM in the year of incorporation. See what they have said, that you don't need to hold a AGM in year of incorporation. So as we had seen that if a company is there, now pay attention, from 1st April 2024, from 1st April 2024 to 31st March 2025. Okay, this is the financial year. Let's say a company got incorporated, company was incorporated on 20th April 2024. So now you tell me, as per the provisions of section 96, by when they should hold a AGM? First AGM will be held by when? So very simple, by end of financial year. So end of the financial year. So within 9 months from end of financial year. So they will hold it by 31st December. Right? So this is the time. So if you go to see, they will hold it year. They will hold it by, if you calculate, so March, April, May, June, July, August, September, October, November, December. So by 31st December 2025, they will hold the first AGM. 9 months from the end of the first financial year. So this, they will hold the first AGM. So if in this case, when was the year of incorporation? What was the year of incorporation? It was 20th April. Year of incorporation was 2024. So is it required to hold a AGM in the year of incorporation as per section 96? Answer is no. They are saying that if it is incorporated year by the financial year ends, then 9 months time. So you will not be holding any AGM in the year of incorporation. That is what they have written. Very simply, easy provision. That if a company holds its first AGM as stated above, then it shall not be necessary for the company to hold any AGM in the year of its incorporation. Simple, they have given an example, and I think you will be able to understand. The company was incorporated in 10th December 2024. Okay, its financial year would end in 2025. The last day to hold the AGM would be 31st December. Therefore, it is not required to hold any AGM in the year of incorporation, that is 2024, that I just explained. Let's move ahead. Simple point. Now it comes to time and location of AGM. Now this is in your section number 96, subsection 2. Subsection 2 talks about the time and the location. So what time again? Can I call the meeting at night 12 o'clock? Answer is no. It has to be called during business hours. Now which is business hours? 9 to 6. Between 9 a.m. to 6 a.m. and that too on any day that is not a national holiday. So when we are calling a EGM, it has to be from 9 to 6 p.m. and not national holiday. Okay. So now the place of meeting, where will you hold this? This is also very, very important. Okay. Amendments have come here also, I'll tell you. Now place of AGM, annual general meeting by default should always be held in the registered office or the city in which the registered office lies. See, registered office might be small. You cannot call all the members. So that time at least the city, town, village where the registered office lies. This is the plain provision. Then I will take it to little extended also and I will tell you. So AGM should be held at either the registered office. AGM should be held at the registered office or some place within the time, village, etc. in where the registered office is situated. Now, what is this? Now see the amendment that is there. The amendment in law. They said that listen, amendment in law. Okay, so this is an important amendment. This is for giving a relaxation flexibility to unlisted companies. Now see, when there is listed companies, it affects listed companies are listed on stock market. So it can affect so many people. So that is why we say, listen, if it is there, then keep it in the where the registered office lies. But if it is an unlisted company, then we say, okay, fine, you can keep it in any place, provided you inform everybody. See, listen, that annual general meeting of unlisted company may be held at any place in India. So if I ask you, it is ABC Private Limited wants to hold the AGM in another state where the registered office does not lie. Is it allowed? Answer is yes. A unlisted company can hold a AGM in any place in India, provided consent is given in writing, okay, or electronic mode by all the members in advance. So let's say it's a private company. A private company is unlisted and there are 4 members. They all have gone for holiday in another place. They will say, let's hold the AGM here only. It is allowed. Answer is yes. Consent of all the members should be taken. All unanimous decision. 100% consent of members is required. Now, earlier here they said that can we hold a AGM on a national holiday? Answer is no, it cannot be on a national holiday. So what is the meaning of the term national holiday? It has come forward many times. So pay attention. National holiday includes a day declared as national holiday by the central government. So central government regulates Companies Act. Okay, it's a central law, that is central government has passed it. So central government will only tell what all is national holiday. But according to the secretarial standards too, they have already said that which all comes under the national holiday. One is 26th, your Republic Day, Independence Day and Gandhi Jayanti. Okay, so 3 days they have given you is in your national holiday as per SS2. Which it is there? It is your Republic Day, 26th Jan, your Independence Day, that is your 15th August, and lastly your Gandhi Jayanti. It is on 2nd October. Clear? So these are your national holidays which has been specified in SS2. Any other which central government will specify will also be counted. On national holidays you cannot do. Now they have told that you should not hold. See, if you see, this is the entire provision of section 96 I've covered. What they have said in 96, that you can have within 5 months for this. Important point is that every AGM shall be called during business hours and it should not be a national holiday. But they have not said anything for adjourned AGM. Okay, so the original AGM should not be called at national holiday. However, adjourned AGM, there is no direct restriction in company law. So you can hold a adjourned AGM because full 96 section they have said that no mentioning of adjourned AGM. So therefore it can be permissible to hold a adjourned AGM subject to the secretarial standards and the articles of association. Now one very angry provision. So now I'm coming to a angry provision by the central government. Now what is happening if the tribunal, now pay attention, if NCLT realizes that you're not calling a AGM or someone comes and complains that this person is not keeping a AGM, then they will call a AGM, they will order. NCLT has a power to order a AGM to be done. In the AGM, if even one person comes, they will say it is allowed. Even proxy come, they say it will be allowed in quorum. Normally all this is not there. Here if the NCLT is angry, they will say I don't care, let the meeting be done. So this is the penalty. Okay, so now pay attention. Now that we've done section 96, now we are seeing section 97 and 99, which is penal provisions for not holding AGM. So let's read. First is 97. It provides that if there is any default in holding the AGM, any member may go and lagao a chugli, that is go and complain to the tribunal. Okay, and then the tribunal will pass any order and give any direction, okay, as it deems fit, and see the direction also. NCLT gets angry now, what they can do, they can give such a direction that include that one member of the company present in person or by proxy shall constitute a meeting. That means if they ever ask you, can a one member constitute a meeting? Ideally for meeting you require two people. Minimum two people are needed for a meeting. But if in section 96 NCLT is angry that someone came and complained that you didn't keep a AGM, then they can give a direction that even one member can constitute a meeting in that way. So imagine they can give any direct power is given to NCLT. Obviously they will not use it, but it is given to them. So there is a hypothetical chance of a meeting being done of one person only. Okay, if NCLT feels. Now coming to the next one, section 98, power of the tribunal to call meetings of the members. 98 may allow the tribunal to intervene and conduct a company's meetings other than AGM when the standard methods are impractical. This can be initiated by the tribunal upon the members or directors' request. The tribunal may mandate the procedures and give directives as it deems fit. Okay, meetings conducted under these orders are deemed properly executed in all aspects. Now what is this? Same thing. Earlier it was on default. Here they are saying if member or director is saying that you call for the meeting. Okay, because we are not able to do for whatever reason, section 98 allows the tribunal. So they are intervening. They are intervening in calling a meeting, holding a meeting, conducting a meeting other than AGM. For EGM basically they are saying. For EGM. Okay. When they feel other methods are impractical, maybe someone directors are not calling or any other emergency has occurred, members can go and complain to NCLT and under section 98 they will order. Okay, can be called. And again same powers are there, that a single attendee can constitute a meeting, etc. So wide power has been given to NCLT in section 97 for AGM. This is specifically for AGM, and for EGM it is in section 98. And 99 is talking about penal provisions, that obviously the company secretary, the directors will be punished for not holding meetings as per law. Now we are doing the provisions of AGM is over. Now we'll see the provisions for extraordinary general meeting. Sir, what is extraordinary general meetings? So extraordinary general meetings is any member meetings other than AGM is called as EGM. Any meeting other than AGM is a EGM. When matters are serious, which cannot be delayed till the next AGM, are convened and discussed at the EGM. The provisions of that is called is given in your section number 100. So section 100 is calling of extraordinary general meeting. Board can suo moto. Now who can call this extraordinary general meeting? One is obviously the board of directors suo moto by itself can call a EGM. Okay, whenever they deem necessary. Finish. Now where will they call? Now the place of EGM. As we saw in AGM, their place was registered office or the city in where the registered office lies. For unlisted companies, anywhere in India can be held provided prior consent is taken of everyone. Now for EGM, extraordinary general meeting, where it will be? So they have said very simple. Any place within India. What is the answer? Location requirement for EGM will be held anywhere within India. So is it required to hold it in the state of the registered office? Answer is no. Okay, here they've said an extraordinary general meeting other than of a wholly owned subsidiary incorporated outside India. Now if it is incorporated outside India, it is a different thing. For that we are talking of a extraordinary general meeting of a company shall be held at any place within India. Okay, so what if it is a wholly owned subsidiary outside India? So we can conduct it outside India also. For wholly owned subsidiary, now I wholly own that subsidiary and it is abroad, then it is my discretion. I don't have to keep it in India also. Okay, other than wholly owned foreign subsidiary. See, wholly owned subsidiary of a company incorporated outside India. Then emergency meeting, I will obviously, since my subsidiary is abroad, it's wholly owned by me, so I can keep it in India or outside India. Now coming to this was BOD feeling that there is an emergency. It is called by whom? So EGM is called by BOD. But what if we feel that the board of directors are doing something wrong, or the members collectively feel that they need to call a EGM? Then even the members have a right to request in writing to the board of directors that listen, according to us the business is going in a downfall, the gross margin, the profit ratio has come negative, we feel that we need to have a EGM. This is by members. Members do not conduct it themselves, they will request first to the BOD and then the BOD will call. So what is this? By the board on requisition of the members. On request. Requisition means what? On request of the members. So first Board meeting is done, is EGM is called by whom? By board. Second is also called by board, but not suo moto, by members request. Requisition is by request. Simple. Let's move ahead. Now let's say I have one share in the company. I call up the BOD and I say, let's call a EGM. They'll say no. There is a minimum number of requisitions that should be there. There should be a minimum number of people requesting the BOD for BOD to call the meeting. So the board shall, okay, so the board shall call a EGM on receipt of requisition from the following number of members. Sir, how many people? So very simple, the answer will always be 1/10. The answer will be 1/10 of the members. What is the answer? It is 1/10. Merely 10% of the people are feeling. But let's get into little bit more detail. By the following members. In case of company having a share capital, okay, there are shares. Then on requisition made by 1/10 of the paid up capital of the share capital. So it is 1/10, that is 10%, 1/10 of those who are holding the paid up capital of the company. Second, in case of company not having a share capital, a company doesn't have share capital. Okay, so I told you also in case of Section 8 companies, what happens is when we give donation in a NGO, we don't expect shares in return, right? We just give it to them. It doesn't have a share capital. Then in that case, members who have on receipt of requisition not less than 1/10 of the voting power of the company. So those who have 1/10 of paid up capital, or if there is no capital, then 1/10 of voting rights in the company. So these members can call. So you have to see whether it is share capital and whether you have 10% of the share capital by you or all the members combined. If 10% of the paid up share capital are coming and requesting to the BOD, then the BOD shall call a EGM. But if it is not share capital is only then voting rights. Simple. But 1/10 you will remember. Okay, so I will just write it in a short form: 1/10 of paid up capital or voting rights, as the case may be. So they will call. Now, subsection 3. Set out the matters for consideration in the requisition. Now, this is request will be a conference call or it will be a written request with sign of all the requisitionists. Requisitionists are all the requesters. They will say, listen, I have 2%, I have 3%, I have 5%, I have 10% of the share company. They will write, first of all, they will tell what is the matter problem kya hai? Why do you want a EGM? So they will tell you that what is the matter for consideration. Or they can say, listen, we want a EGM, we are getting a good amalgamation takeover offer. Or the company, there is a huge taxation, we have been slapped with a tax notice. Let's discuss that. So that could be, so they will tell what is the matters and everybody will sign. So the requisition shall set out the matters for consideration and shall be signed by the requisitionist and it should be sent to the registered office. Any of this is not done, then the board is not required to call. So first is they have to give the matters. Why are they calling? What is the matter issue? Second, it has to be signed by all the requisitionists. 10% should be cleared. And it should be sent, that valid requisition should be given to the registered office of the company. Now pay attention to this. This is very, very important. Okay. Now there will be a point of 21 days. There will be a 45 days and there will be a point of 3 months. So 3 important dates are there which you will have to understand. 21 days, then 45 days, and then 3 months. Once you understand these three important dates, you are sorted with this main technical part. So what happens now? Pay attention. Here is the timeline. I'm making the timeline. This is under section 100. Meeting is called by BOD on request. Requisitionist. So here, first thing, they have to give a signed valid requisition. So there will be a valid valid a valid requisition will be given here. Here from here. Moment we give a valid requisition request signed by all the requisitionists at the registered office of the company, then the timer starts. From here, within, so I'll call it as date X, okay? From the date of receipt of valid requisition, which has been signed, and given to the registered office properly, okay? With the proper 10% people are there, voting rights, whoever has, they are there. Then from here, in the next 21 days, within 21 days, the BOD will proceed to call a meeting. So the BOD in this much time, within 21 days, will proceed to call a meeting. So when I say proceed to call means what they will tell the requisitionist, don't worry, we are calling a meeting. We are proceeding to give a notice of the EGM. We will call the meeting, the notice will be circulated, and from the date of valid requisition within 45 days. Now 45 days is from date of receipt of valid requisition. Within 45 days we will actually call the meeting. And if any of this is breached, then the requisitionist will call the meeting within 3 months. So here this is 3 months they will hold a meeting themselves. Sir, again, within 21 days, first of all, within 21 days, what is happening? Announcement is coming. Board is proceeding to call a meeting. So we see some action, we stop. The BOD will then announce that, listen, we will hold a meeting within 45 days from the date of receipt of valid requisition. I say, okay, fine. If any of this is breached, in 21 days we didn't listen, or in 45 days meeting was not held, then the requisitionist will call the meeting themselves within 3 months from the date of valid requisition. So 21 days is also from here, 45 days are also from valid requisition, and 3 months is also from valid requisition. Clear till here? Let's read the provision and understand now. In 21 days, we will proceed to call a meeting not later than 45 days. If we fail, then within 45 days, 33 months, the requisitionist will call the meeting themselves. Okay, let's see. If the board does not within 21 days from the receipt of valid requisition proceed to call. So what are they going to do within 21 days? Within 21 days, they will proceed to call a meeting. And the meeting also should be called on a day not later than 45 days from the date of receipt of valid requisition from date X. If this is breached, the meeting may be called by and held by the requisitionists themselves within a span of 3 months from the date of valid requisition, if any of this is breached. So if you see valid requisition 1, valid requisition 2, valid requisition 3. So all these 3 dates are connected and counted from your date X. Clear? Done. Manner of calling the meeting. How will you call the meeting? In the same way that you call a general meeting. Okay, held in the same way as you would have normally conducted a meeting. Reimbursement. Now, if the meeting was called by the requisitionists themselves within 3 months, then obviously they would have to pay for the hall wherever the AGM was conducted, for the expenses of the circulation of the notice of the meeting. Everything will be done by the requisitionist only if the BOD is failing to call the meeting. expenses will be there of food, water bottle, all of those expenses. So those all will be reimbursed by the company. Any reasonable expenses incurred by the requisition, okay, in calling a meeting shall be reimbursed to the requisition, and the sums paid to them shall be deducted from any fees or remuneration given to the directors. So the sums paid will not be deducted from the company, but it will be deducted later from the defaulting directors. So sad. So we are done with members meeting. Members meeting was AGM and it was EGM. Now we are talking of class meetings. Class meeting is when a company has issued a separate class, because if you see, Reliance doesn't always issue shares at the beginning and then never they have done a public issue. They keep doing public issues regularly on different terms and conditions. So when they are holding for one class only they want to speak, so they will call only members of that class. For example, preference shares have been issued, so they will come here. Class meetings means held by holders of a particular class of shareholders. Such meetings would normally be called when it is proposed to vary the rights of that particular class. When you will call that class, when I plan to change something or have some discussion with that class only, which will not be applicable to anyone else. Class meetings held to pass resolution will bind not only the members of that class concerned but also anyone who has attended, and means just like a resolution pass will be applicable to all. So once a class meeting has been called and any decision has been taken, it will be applicable for everyone. Now for class meetings, there is no section come below defining what is a class meeting. But they have said that, listen, section 48 has been given that if any class meeting there is a variation in the rights of a class or members, then what can be done? That means if there is a class meeting, in that class meeting if there is a variation, then how you can vary the rights of that class. For example, I am there of a certain class of shareholder and my rights are being varied. So what are the rules? It will be given in section number 48. It talks of variation of members' rights. So for this you will also remember certain numbers, that is 3/4. 3/4 you will remember. Then you will remember 10%. 10%. There are actually 4 days that you will remember. Then you will see 21 days. 21 days. And lastly you'll remember 30 days. And lastly you'll remember 30 days. So 4 important: 31 days, 34th, 3/4, 10%, 21 days and 30 days. Okay, so now let me explain what it says. It says very simple that whenever we want to vary the rights of a certain class, we have to take special resolution, that is 3/4 consent of that class. So where a share capital has been divided into different classes, the rights attached to the class may be varied. So can be varied? Yes, obviously you can vary. But you have to take consent in writing of not less than 3/4 of the shareholders of that class. Or a special resolution means one and the same. So 3/4 is done. So 75% consent I have taken, but maybe 25% is disagreeing. So if from that class 10% are extremely unhappy, they're saying no, I don't want to change, I don't want the variation, I don't want terms and conditions to be changed. So 10% could be dissenting. So 10% can go to NCLT and complain to NCLT that I don't want this variation to be done. So 10% dissenting shareholders can approach NCLT within 21 days of that special resolution. They will go to NCLT and complain that, listen, I don't want, and NCLT will pass an order as it deems fit whether to allow the variation or not allow the variation. And this order has to, NCLT order has to be complied within 30 days. So let's read. 3/4 we read, where holders of not less than 10% of the issued class who did not consent to such variation. So 10% of the class who didn't agree okay, may apply to the tribunal to have the variation cancelled, and variation shall not have effect unless NCLT has confirmed it. An application shall be made within 21 days after the consent was given or the resolution was passed. So 3/4, whenever it was there, special resolution was passed, within 21 days have to go to the NCLT. The tribunal order shall be binding, and the company shall within 30 days of the order of the tribunal file a copy with the registrar. So they have to comply with the order and inform the ROC also that listen, I have got this by order. So let's read. Section 48 is about whenever we are varying the rights of a certain class, we can do it with 3/4 consent, that is special resolution. However, 10% who have disagreed have a right to go to NCLT to cancel the variation. Until NCLT order, no effect shall be given to this variation. Now this 10% class will approach NCLT within 21 days from the date of passing the special resolution or 3/4 consent. And then whatever NCLT has passed the order, that has to be informed to the ROC within 30 days. Finished, let's move ahead. Now, if a company, an illustration they have given, if a company wants to vary the rate of dividend on its preference shares, then the company can convene a meeting of the preference shares and get their approval. This is a class meeting of shareholders because these are preference shareholders. Now we are talking of creditors meeting. Now creditors meeting is also a class meeting, but class meeting for that creditor. So when I just want to talk to the bank who had given me the loan, it's a creditors meeting. It could have only one person as the quorum. Why? Because creditor is only one. So we can call him and we can have a class meeting with that one person and talk to him about, listen, we want to restructure the debt, we want to change the payment plan, we want to revise the interest rate, we want to do some rescheduling of the debt. All of this we will talk with our creditors. So in case of creditors, company can, if they have different debt securities, bonds, debentures, bank loan, company may convene to that and address the matters with them which affect that particular class of creditors, and we can have a restructuring plan, amendments to their debt, okay, whatever, in the same way. Now we are coming to section number 101. Now section number 101 talks about the notice of meeting. Now as we know, even where we live in a society, there is a notice of AGM given. Notice is the intimation, is informing the members that listen, we have a meeting, this is the agenda, this is the topics, you all come prepared to the meeting, and then we will have a fruitful discussion, and then whatever everyone decides, we will resolve and pass a resolution and then decide what is to be done. So in company law also, section 101 talks about notice of meeting. Now the very first thing is, notice of meeting has to be given at least 21 clear days before the meeting. So 21 days meeting. So even if you see in your building meeting also, if I just say I give a notice to your house that meeting is there tomorrow 9 a.m. you will say you should have informed me earlier. So in company law also, what they're saying that the length of the meeting should be at least 21 days before. Till here we had always studied in our 12th and before, but if now you're a professional, you should also know that 21 days is not applicable to all companies. For section 8 company, it is only 14 days prior notice. So in case of section 8 companies, 14 clear days notice should be given instead of 21 days. Please note this. So for all other companies 21 days, for section 8 companies, NGO, where it is not for anyone, it's just for charitable, then 14 days also notice you can give and call. But wherever you see they write the word clear days, okay, notice could either be in writing or through electronic mode. Okay, here also they have told clear days notice. So what do you mean by the term clear days notice? So clear days notice means that the date of dispatch of the meeting So the date of dispatch of the notice should be excluded and the date of the meeting should be excluded. So when I dispatch the notice, that day should not be counted and the date of the meeting should not be counted, and then I have to give 21 days. So excluding those 2 days, a shareholder should get proper 21 days time intimation. So the expression 21 days notice means that the date of service of the notice and the date of the meeting are excluded. This was held in Nagappa Chetari versus Madras Race Club. And there is one more line that, listen, 21 days notice has to be given and 21 full days. Sir, what is this full? Full calendar day it should be there. Mean what? Let me explain. So principle of full calendar days, fractions are not to be taken into account. Fractions are not to be taken in account. It seems very technical, but when you will read, you will say it is common sense. Yeah? Obviously, it is understood. So fraction should not be taken into account. That is part of the day after which the notice was posted should not be combined with the part of the day before the meeting to form one day. I'll tell you what it means. It's very, very stupid. They are saying that, listen, if the meeting is at 11 o'clock, can the time before that be counted half a day? And if I've dispatched in the morning at 11, then after that I will say this entire day. So they say, no, not like this. Understand the illustration. For a meeting held at 11 a.m. on 23rd, with the notice dispatched at 11 a.m. on May 1st. Notice is given on May 1st 11 a.m. and meeting is held on 23rd May 11 a.m. So 1st May, that half day, and 23rd, which is at 11, so just before that 10, 9 a.m. cannot be clubbed to call it one day. Common sense. So the day of the dispatch is the end. If I have given at morning 7 o'clock also I have dispatched, the one full day is excluded. Clear? And when I say date of the meeting, then the time before that is also the full date of the meeting is to be excluded. Therefore, counting from will start from when? Can I start my counting by 1 p.m. on 1st May? They will say no. The beginning will be from second day. So the full day will go away. For meeting also full day gone. For the dispatch also full day gone. Okay, you cannot take few hours here and club it and make it 12 hours. With each of the day being a full day. This is common sense and I agreed. You would have also agreed to this part. Now, very, very important, something which you have to learn with the rule number. Normally, I don't tell to learn the rules, but this part you have to learn with the rules also. The rule is rule number 35, sub rule 6. It is specially for notice sent by post. Now see, when I send a notice by email or by your electronically, it will immediately be sent to the recipient. I send a notice and that is it. He will receive it. Online you will receive it immediately. But when I send by post is I have sent by post today. Then transit time is there. It will receive to you a little later. So it doesn't make sense to start your time immediately next day. So they are saying that start the time, okay, after 48 hours. So the time of 48 hours should be excluded if it is by post. So rule 35 sub rule 6 is saying that if a notice of a general meeting is sent by post, it shall be deemed to be served at the expiration of 48 hours after the letter was posted. So if I have posted the letter today, okay, so I cannot start the time from tomorrow. Normally today I have posted, we saw that full day goes away, and from normally if it was by electronic we would have counted that from tomorrow, but they are saying no, for post as per rule 30, what was the rule number? Rule 35, sub rule 6, we will start after 48 hours. So 48 hours, that is 2 days will be taken. So today, tomorrow, day after is excluded. So 2 days exclude more for post. And then from here you have to count your 21 days. So we will see few illustrations also. Just before we do the illustrations, pay attention that deemed service of notice. Sometimes if you notice that in company law, as a safer side, we also issue a public advertisement. We do a public notification, newspaper advertisement. Whenever we do the newspaper advertisement, it is deemed that notice of service of notice has been done. So it will assume that you have read the newspaper. So service of notice of AGM can be done individually. I can send it individually to everyone, or I can do it by email, or I can do it by post, or I can also be doing it by newspapers. It will be deemed as a valid service of notice held in Ganesh Commercial versus Arun Kumar Mohta. For example, if a company has issued a newspaper advertisement, so it will be deemed that the notice has been served to me. So sometimes when I might have not received the notice, but because of change in address, change in email ID, it must have got bounced. They will normally resend it. But if for some reason, let's say was not there, then a newspaper advertisement is also considered that you have got the notice. Now let's take this illustration, okay, and try to understand the delivery of summons. Now these are some exam questions. Let's see. ABC Limited has issued a notice on 1st August 2020 to hold its AGM on 24th August 2020. So notice was on 1st and AGM is on 24th August. Check the validity of the notice in case it is sent by post. So you tell me. First thing is it is sent by post. So date of posting is excluded. So 1st August full day will be excluded. So I will date of days to be excluded. Come here. Date of holding the meeting will be excluded. Date of dispatch of the notice is excluded. So your date of dispatch is 1st August 2020 is excluded, plus 2 days excluded, and 2 additional service days. So first is gone, second is gone, third is gone. 48 hours we will take 2 days. So 2 days additional days will be excluded, that is second and third will be excluded. Okay, so now we will calculate from 4th. 4th is your first day. So first is as it is removed and 2 additional days will be removed. So second and third is also removed. From 4th we will start counting. And the date of the meeting is 24th. So 24th is also excluded. So we'll calculate second. So when you calculate, you will come to know it is from 4th. You will add 21 days. So you'll come to 25th. So therefore, when you do the calculation, okay, first, second, so on, when you will do, you will come to know it is only 20 days. Okay, number of days required is 21 days. It is not a valid notice. Clear? That from 4th when I count 4th, 5th, 6th, 7th, 8th, 9th, 10th, 11th, 12th, 13th, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24. So it is coming on 24. So it should be 24th is not allowed as a day. It should be excluded. So within that much time, proper 21 days should be there. So therefore, it's only a 20 clear days has been given, not 21 days. So it is invalid. However, you will extend saying that, however, if there is a prior notice of consent can be taken for shorter AGM, which we will see. If shortfall of 1 day can be condoned, can be allowed if consent is given by shorter notice of 95%, which we will see. For shorter notice also there is a provision. Service of notice by hand, posting, etc. is deemed to be a valid service. So that is it. So what we have done is the date of the meeting, the date of posting plus 2 days we are excluding, and date of meeting we are excluding. Within that much time there has to be 21 days. So from 4th, so when you calculate from 4th to 23rd, it is only 20 days. Clear? If you calculate 4th to 23rd, it is how many? 20 days. Now we see another example. Now you will try. XYZ Limited issued a notice on 1st August 2019 to hold its AGM on 24th August. The company had given a notice through email to all the members. The same was received by the members of the company. Check the validity of the notice. So this is by email. Only for post we had 2 days. So from 2nd to 23rd, if we calculate, because 21st is to be excluded and 24th is to be excluded, from 2nd August to 23rd August, you will count the days, how many it is there, 2nd, 3rd, 4th, you will come to know that they have given proper notice. Is not less than 21 days, clear days should be given. So days to be excluded, here notice of 22 days is given. So when you sit and count it, it is 22 days notice. Hence it is a valid notice. Now coming to shorter notice. Now we saw that 21 clear days has to be given, and in case of Section 8 company, 14 days clear days notice has to be given. Now what if the company wants to call a meeting much earlier? They don't want to wait. Now if I see that there is a private company has very few members. Now they are saying, where 21 days, we want to discuss it in a short time. In 10 days I want to discuss, we can come in 10 days. So can the company have a shorter notice? It is very, very, very important. So the answer is yes. So a meeting may be called by after giving a shorter notice. If consent in writing or by electronic meeting is taken by, in case of AGM, by not less than 95% of the members, as we saw above. When it is lesser days, then we also put that, listen, if they've already taken a shorter notice, it can the consent of 95% of the members, then it can be excluded. And in case of any other meeting, means other than AGM, then if a company is having share capital majority in number and 95% in value, that is 95% of the paid up capital. In case of not having share capital, 95% of the voting power. So here I have summarized it to make it very, very simple for you. What is it? Notice, shorter notice consent. So in AGM, it is very simple. In AGM, 95% of the members entitled to vote. So we calculate not shareholders, how much holding you are having. We are calling people. Come here. Chalo. How many people are there? 100. Come here. 100 people come here. I am taking consent of 95 of the members entitled to vote. So am I taking the shareholding? Am I taking the value? Am I taking your voting rights? No, I am just calling in people 100 people, and I'm asking 95% of the members who are entitled to vote are giving consent. So fine. So head counts I'm taking. Head counts is done. Because see, in AGM, every small little shareholder is also treated equally. You cannot, for AGM is a big thing. Everybody comes, etc. So they say head counts is enough. But for EGM, any other meetings, so that time we say EGM is people some who must be having a lot of stake, who must be having good amount of shares. They will decide now what is to be done in the emergency. So that time we said here also we will not say that not count head counts. Both we are doing majority in number of the members and representing 95% of the capital. So 55%, 51%. See, majority means what? 51 in number. So head count also 51 and representing 95% in value, paid up capital. So it is possible. I'll take Ratan Tata. His one head count is only 60%. So like that, head counts also will be 51 and total they will be 95% of the paid up capital being there. For if you don't have a share capital, then 95% of the voting power. Clear? So if in this second case, in this EGM for having a share capital, I can catch everyone who has there are 51% members are there. But they are representing only 10% shareholding in the company. So can they give consent and can the shorter notice be called? Answer is no. You require first AGM, we require head counts. We don't care. Money is not a number here. Call the head counts. So 95% of the members entitled to vote can allow, permit, sanction a shorter notice. For other than that, we are taking both head count 51% and representing value of 95% of the paid up share capital of the company. This is what it is given. Clear till here? So in AGM, I will take head counts, 95% of the members. And in case of other meetings, I will take members and share capital, both. Majority of the members and representing 95% of the share capital of the company. Now, conditions for holding meeting on shorter notice. The request for consenting a shorter notice and accompanying document shall be sent together with the notice and the meeting, and the meetings shall be held only if the requisite consent of the members is received prior to the date of prior to the time fixed for the meeting. So you have to get a prior consent. Okay, so and obviously now if I want to hold it in 16 days, or first I want to hold it in, let's say, in the next 7 days. So first consent will be taken, then meeting will be called. So this is what they are saying, that request for shorter notice only if the consent is taken prior to the meeting, then it is allowed. Contents of the notice. Now very important, we are doing section 101, subsection 1 is over. Now we are doing subsection 2. Subsection 2 is saying notice of the meeting. Notice of the meeting will specify, will tell you what any meeting you've seen, time, place, agenda, it will be given, and the date and hour of the meeting will be given. Recipient, so whom all it has to be given? It has to be given to every single member. If a member has died, then to his legal representative. Will be given to the auditor of the company and will be given to every director. Now, as per SS2, they have extended it, this on who we have to give a little more people. So SS2 says notice shall also be given to the members, legal representative, insolvent, debenture trustee, liquidator, and other specified person. So even they will get the notice of the meeting. So simple, we will dispatch it to everyone. Now, inadvertent omission to send a notice shall not invalidate the proceedings of the meeting. Sir, what does it mean? So section 101 subsection 4 is saying that inadvertent. Inadvertent means unintentional. Omission to send a notice. For example, I out of crores of shareholders, I missed out one shareholder. So that one shareholder is saying I didn't get the notice of the meeting, and that is why whatever meeting has been conducted is invalid. So they say, listen, because so many shareholders are there, some accidental omission can be done. So as a precautionary measure, we do a public announcement. Always. Public announcement is done, it is deemed that you've received the notice. So any accidental omission or non-receipt of notice by any member shall not invalidate the proceedings of the meeting. So just because you didn't get doesn't mean that the meeting is invalid. The meeting will still remain because it was unintentional. Now rule 18 of notice of meeting. Now this is very simple. Rule number 18 with respect to notice of meeting. Now if you go to see, if you must be a shareholder, you will notice nowadays the physical physical e-notices have stopped coming. There is more online, directly on your email you get option of e-voting. So normally you give a consent, a company may give notice through electronic mode, which is majority of the case in today's time. Now where does it come? It comes in your email, and in the subject matter it will be written also very clearly that it is a AGM, which 101st AGM etc. will be written. Okay, and with that they will also give you a notice will be sent by email. Now notice will be sent by email. Along with that they will give you the URL link to download the notice PDF. If you need a link to download the PDF, that will also be given. Now methods of sending the notice. Okay, methods of sending the notice is, first it will be, now I'll just tell you logically, before sending the notice they all update the email records. Okay, if anyone has requested change of email ID, that will be done. Then the email shall be addressed to the person receive. Okay, name of the identification of the person will be given to whom they are giving. So it will come thank Mr. Zubair Jahangir, and then it will come, the email will be addressed to the person entitled to receive the email. The subject should mention the notice type, 101st EGM AGM meeting. Attachments format standard. Okay, so PDF, that is a portable document, is there, or in a non-editable format along with the link and instructions to download the software will also be given. So sometimes some old people might not be having a PDF downloader, or they might not be having a PDF reader. So they are saying that if the notice is in a non-editable attachment, such attachment shall be in PDF form along with the recipient to download the PDF software. So PDF reader also we should give. Confirmation and record keeping. So this is just general, you can read it up. When the notice or the notification of availability of notice are sent by email, the company shall use a system that produces confirmation of total number of recipients, to how many it has been bounced, failed transmission, and try to resend the ones to who you could not send. So nowadays email have this facility that when you give, you will come to know to whom how many did not go. So your software should have that thing, and then we should resend to those who could not be sent. Transmission obligation and limitations. The company's obligation shall be satisfied when it transmits the email. Okay, and the company shall not be responsible for failure or transmission beyond its control. As I told you, inadvertent omission to send you the notice, unintentional, that you could not receive the notice will not invalidate, it will be a valid meeting. We tried our level best, and best is we make a newspaper advertisement. Member responsibility for notice reception. If the member fails to receive the notice in his email ID, the company shall not be held in default. Okay, or he has failed to update any of his details, company will not be held responsible. Then authorized email sending channel. Company may send email through an invoice facility, through a in-house facility, its registered transfer agent, or have some bulk email facility. Nowadays you have MailChimp. It is a bulk email sending software that can be used by companies, or they must be having their own thing also. The notice shall be made available on electronic link, and it should be kept. The notice should also contain, the company shall provide the complete URL or address of the website and full details of how to access the document information. The notice made available on the electronic link or the URL has to be readable, and the recipient should be able to retain a copy. So very general. Simultaneous website posting. So this you can remember that yes, the notice of the meeting is also put on the company's website, and including the is simultaneously placed on the website of the company if any, and on the website of as may be notified by the government. So the government can tell you. So now let's read some few questions and let's see. Decide whether the length of the notice is proper in the following cases according to a Companies Act 2013. So very simple. We are seeing the length of the notice. So length of the notice should be 21 days. 21 days clear days notice. AGM was in Sky Limited, case 1, and this is case 2. Date of AGM is there and date of sending the notice. So date of sending the notice is excluded, 6th is excluded, and 7th is excluded. We will start counting from 8th as first day, and we will keep counting till 29th. 29th we'll keep counting because 30th is to be excluded. So from year till year we'll calculate and we'll see. And accordingly they will make a decision. So they have told this, okay. Now we are coming to the next part, is adjournment of meeting. Now we are coming to adjournment of meeting. Very, very, very important, okay. So it's extremely important, very, very important. Okay, so let's start. Now, can a meeting once called be adjourned? There is first of all a difference between adjournment and postponement of meeting. Can anyone tell me what is difference between adjournment and postponement of meeting? Adjournment and postponement of meeting difference. So, what am I saying? The difference between adjournment and postponement. Try. See, in postponed, your exams sometimes get postponed, where without even convening it, we are just postponing it. So, without calling meeting, without holding meeting, we postponed it. That's a postponement. Exam got postponed, so you don't convene it. Adjournment, what happens? Meeting is called. Your meeting is called and then adjourned. And then adjourned for reasons such as maybe we could not complete, it is not complete, all the matters could not be discussed, it was a long meeting, or when the meeting was called there was a disruption and violence in the meeting. So that time you can adjourn the meeting. So in adjournment, the meeting is called for some reason which the chairman feels, he can then now adjourn it. So the word is adjourned. Postpone means what? They say 25th of meeting, 25th you are not calling, maybe you are shifting it to 29th without even holding the meeting. So now let's see what is the provisions for adjournment of meeting. Now, conditions for adjournment. A meeting shall not be adjourned unless it is circumstances are warranting it or necessitating it. See, Every time I said come tomorrow, come day after, come this, so nobody has time. Some people travel from different states, etc. So you have to be very considerate. And who has the power to adjourn? The chairman has the power to adjourn with the consent of the members or as directed by the members, provided the quorum is present. Meeting also stand adjourned for want of quorum in case of disorder. So we'll see the provision right now. Is just understanding. If there is a disorder or if the quorum was not present, everybody came but there wasn't many people to, the quorum was not present, so it got adjourned. Now, what is the point? That if in case of adjournment of meeting, do I need to give a notice of meeting? Again, this is the entire important part which I wanted to tell you. Think, read, see what is there on your screen and tell me that if a meeting is adjourned, do I again have to send a notice of the meeting? Yes or no? This is like a sure shot examiner's favorite question to ask. So it depends for how much time you are transferring the shifting the meeting. So now pay attention. I have summarized it here. You can take a screenshot. This is the entire summary that I have made. So first is adjournment duration. It depends for how long have you shifted the meeting. If a meeting has been postponed is sine die. Sine die means what? Without a date or for a future time where it not been told when. Sine die means without. Sine die in this is a Latin word which means without a day. When a meeting has been adjourned indefinitely without assigning a future date, it is called as sine die. So if the chairman has said that I am adjourning it, I don't know when, I will tell later in my announcement. Or if he postpones it for 30 days or more, then notice of at least 21 days should be given. So the regular provisions of a company law will apply if the chairman has adjourned the meeting sine die or 30 days or more. If he has done then less than 30 days, then you have to give at least 3 days notice. So 3 days notice has to be given if it is less than 3 days. But if it is not exceeding 3 days, then notice individually you have to inform or you have to take a newspaper advertisement. Again, so if it is I'm in the meeting only, I tell, listen, now only 3 matters are left. We have discussed all the matters that were required to be discussed in the agenda. Only 3 things are left. We can keep it after tomorrow and finish it off. So now I'm just keeping it tomorrow. So what is it is not exceeding 3 days. So individually I can give a notice, email best, or a newspaper advertisement. Okay, so I can give a day after, etc. if everyone is there. But if it is exceeding 3 days but less than 30 days, okay, if it is between 3 to 30 days, okay, 3 to less than 30 days, then at least 3 days notice has to be given. Okay, so it is exceeding 3 days, so at least 3 days notice I will give. And sine die, then it will be 21 days. So let's read the provision and complete it. So I have told you the summary. Now I'll read it from the depth provision. That adjourned for more than 30 days or more. If a meeting is adjourned sine die or for 30 days or more, notice of the adjourned meeting shall be as per the regular provisions of company law. So adjourned sine die or 30 days or more, regular provisions of notice shall apply. If it is less than 30 days, if a meeting is adjourned for less than 30 days, then at least 3 working days notice should be given, okay, to the members either individually or by publishing it in the newspaper advertisement in a vernacular and an English medium newspaper. So 3 conditions. One is if it is sine die. Second, if it is for less than 30 days, then they will do 3 days notice or publish in the vernacular medium newspaper. And third is if it is not even for 3 days, then where the announcement has been made at the meeting itself. At the meeting only we said now only tomorrow we will meet. Then giving the details of the time, date, venue and the business to be transacted. If all this is done, then the company may also opt to give a notice of such adjourned meeting either individually or advertisement. So let's complete it again. Let's finish it off. First of all, in your entire company law, these adjournment provisions are not mentioned. About 30 days, 3 days, all of this, notice how much time it should be given. It is coming from your SS secretarial standards. In secretarial standards, they are saying that if it is 30 days or more, then the regular provisions of this shall apply. If it is less than 30 days, then you can give the individually or newspaper advertisement. If it is not exceeding 3 days, then the company should not exceeding 3 days and the company, the chairman in the very meeting itself, he has told what is the agenda, when it will be done and all those things. So that means everybody is directly informed. So company can opt to give a notice either individually of private. If there is a private company, 4 or 5 people, you will inform them directly or make a newspaper advertisement. Is the concept perfectly clear? Yes or no? Is the concept perfectly clear? Yes, simple, nothing much. Now similarly, if it was for adjournment of want of quorum, now same rules will apply. Now just pay attention to what I'm saying. If the meeting could not be held was adjourned due to want of quorum, the minimum number of members required to be present were not present, and because of this shortage of number of people, the meeting was adjourned. Then it shall be held in the same day next week. If a member other than a AGM and a requisition meeting stands adjourned for want of quorum, the meeting shall be held on the same day next week at time and place determined by the board. So I have summarized this also, but I'll read it first. That if it is want of quorum, then it will be on the same day week as will be there. Not less notice of 3 days notice, not less than 3 days notice. So if the meeting is adjourned by want of quorum for the same day on the next week, same time and place, or with a change of day, you have to give at least not less than 3 days notice, specifying the date, time, venue, agenda, everything to either the members individually, or you can just make a newspaper advertisement. Same points for as above for 3 days. So here they have given you, I have summarized it here. You can take a screenshot of the rule. What it is saying, situation, adjournment for want of quorum. Then it will, if the quorum is not present, then it gets adjourned on the same day next week, time, place as determined by the board. How much requirement is there for quorum? Adjournment due to want of quorum? At least 3 days notice should be given either individually or in a advertisement of the newspaper. So same points I can say here, that if you want, how many days they are saying? 3 days notice. So this is also the same. This is also same for adjournment due to quorum. For adjournment due to quorum. So again, these 2 points you have to remember, that both the provisions are same. That if the meeting is not exceeding 3 days, if the meeting is adjourned for not exceeding 3 days, or the meeting has been adjourned for want of quorum, then either you give a notice individually or advertisement. Not less than, so this point will be there, 3 days for quorum. Okay, quorum, at least 3 days notice has to be given. So here this you will take a screenshot of this. So now if you go to summarize, 30 days, more than 30 days normal provision. So here what is it? Let's summarize once and for all and finish it off. Okay, we'll summarize one last time and finish it off. Okay, now pay attention. If adjournment is for sine die, then the regular provisions apply, 21 days which is there. If it is for less than 30 days, then 3 days notice will be given. And if it is not exceeding 3 days, then obviously it's so less time, then individually or a newspaper advertisement. Now if it is for want of quorum, okay, if the quorum was not there and got adjourned to the next week, then we will give a 3 days notice. That's it. Or newspaper advertisement. So is the provisions of adjournment perfectly clear? Adjournment of meeting, notice requirement. Absolutely clear. This is very, very important. You have to know it. Both the table I have made, if it is for quorum, then 3 days notice has to be given, and or the company can 3 days notice has to be given individually or by newspaper advertisement. Now again, very simple. Quorum at adjourn meeting. Now let's say the quorum was not present, we saw, then what we will do, it got shifted to the next week. We gave a 3 days advertisement, newspaper or individually. And on that adjourn meeting also, people didn't come. Then they say that if on the adjourn meeting also, if the members are only not coming, then the balance members not being less than 2 shall be deemed to be the quorum of the meeting. So let's say if the meeting, ideally what is the logic that we want people to attend the meeting. We are saying that in this meeting nobody came, so adjourn it. So they adjourned. On the adjourn meeting also nobody has come. Then what to do? Like that too, they will never be able to conduct any meetings. Nobody will come. If they are disinterested, then we will hold the members present not being less than 2 shall be deemed to be the quorum. So if at an adjourn meeting the quorum is not present within half an hour from the time to be appointed, the members present not being less than 2 will constitute the quorum. So on adjourn meeting what happens? Members present become the quorum provided they are not less than 2. So here if you see, a meeting is adjourned, meeting was held, no quorum, meeting gets adjourned. On the adjourned meeting, no quorum, then if only one member is present at the meeting, then the meeting will stand cancelled because you require minimum 2. Members present not being less than 2 will become the quorum and it will be, meeting will be valid. Now for adjournment also you will give a 3 days notice. Okay, 3 days notice whether individually or newspaper advertisement will be done. Now very, very important about cancellation of meeting by requisitionist. Now remember in section 100 we had done that the requisitionist feel that a very emergency meeting is there. They had informed the BOD but the BOD also didn't call the meeting. So then the requisitionist called the meeting. Now if the requisitionist have called the meeting and the quorum was not present, then the meeting for requisition under section 100 will not be adjourned, it will be cancelled. That listen, if all of you all called an emergency and in you all only couldn't get the quorum, then the meeting stands cancelled. So this is specially for the requisitionist under section 100. Under section 100, that a meeting called by the requisitionist, if the quorum is not present in such a meeting, then the meeting stands cancelled. It will not be adjourned. So if within half an hour from the appointed time a quorum is not present or no meeting called by the requisitionist, the meeting stands cancelled. Now, business at adjourned meetings. Now, at adjourned meeting, what business can you do? Can I do a new business? Answer is no. Ideally, we had 15 topics to be discussed. 10 got discussed now. 5 could not be discussed because it got very late. So we adjourned it. So only unfinished business of the original meeting shall be considered. Only unfinished business of the original meeting shall be considered. Any resolution passed at a general meeting would be deemed to have been passed on the date of the and not before that. Now this is also very, very, very important. What are they saying? That if on a, now this is the original meeting. Let's say the original meeting was held on 26th May 2025. What happened? It got adjourned. It got adjourned, okay, to let's say 26th June 2025. Okay. Now in this meeting, in the original meeting, 5 matters were discussed, 5 matters were decided, resolved for 5 matters, and here it was adjourned and 2 matters which were pending were adjourned and then 2 matters were decided. Now for the adjourned meeting, what matters have been decided? For the adjourned meeting, what matters have been decided? What date will come? That this has been decided on 26th May, date of original meeting will come, or date of adjourned meeting will come? Think and tell me. That adjourned meetings has been decided. So matters decided on adjourned meeting will be deemed to be passed on adjourned date or original meeting date. So obviously it will be in adjourned meeting date only, because that is how you will have a sync and it is a fact. So any resolution at a adjourned meeting should be deemed to have been passed on the date of the adjourned meeting and not on a earlier date. Clear? Next is irregular notice. Irregular notice means a notice sent violating some of the provisions of Companies Act. So section 101 we saw gives you certain rules for notice. So a notice which fails to comply with the legal requirements of or any procedural requirement of Companies Act 2013 shall be deemed to be irregular notice. Some examples of irregular notice is board of director forgot to sign, date was not mentioned, okay, it was not in accordance with the act, the appointment of the director showed his has a sign of the notice is void, and the notice shall be issued after a discovery of the invalidity. So the notice of the general meeting is issued without the authorization of the board. Notice is issued by an invalidly constituted board. So any of these reasons, if you see, date was not mentioned, all the members were not informed, the direct auditors were not giving the thing. So any place where you have violated a section of the company law with respect to notice, that notice will be called as an irregular notice because it doesn't comply with all the conditions. Now we see section 102. Very, very simple. Section 101 is about notice of meeting. Now with notice of meeting, we contain the agenda. The agenda is divided into 2 parts always, either ordinary business or special business. Ordinary business is adda, which I will show you. If you do that, then it is an ordinary business, no special explanation is to be given. However, if I do a special business, for special business, which I'll tell you which are those special business, you require a explanatory statement. you require an explanatory statement. So very simple, that ADDA, only these matters as given in your section 102 are deemed to be your ordinary business. All matters other than ADDA is special business. Special business. So if it is a special business, then you require then explanatory statement is required. This has nothing to do with ordinary resolution and special resolution. It's not that for these matters, ordinary business, you require ordinary resolution, or for special business, you require special resolution. There is no connection at all. For what ordinary business and what special will be written in the act. This is just to identify whether explanatory statement is to be given or not. So you will see these four things. You don't have to give an explanatory statement, logic, and it is very logical also. Because if in a meeting when I'm going, when as a meeting I'm going, I will assume that listen, they will talk about dividend of the company. They will talk about the dividend of the company. They will talk about the directors who are being appointed have to be reappointed, something like that. They will talk about, very important, the accounts of the company, and they will talk about the auditors of the company. This is by default, every single person coming will connect that listen, this to will be there. So for that, in the notice they don't have to explain. However, if there is about takeover, there is about merger, there is about investment in a new object of the company, alteration of MOA, alteration of AA, change of the registered office, change of name, or raising of taking another loan. Now all these matters are not given in these four things. So they are special business. So you have to attach a explanatory statement explaining why the board of directors are requesting to pass that resolution. Clear? So explanatory statements is attached for every single special business. Done. This is given 102. Then nature of the business. Ordinary business are 4: dividend, directors, auditors, and financial statement that I called it as accounts. Or in case of all other meetings, all business shall be deemed to be special. So all other things will be special. And one interesting thing is that in EGM, only special business can be conducted. So that is another use why, what is the purpose of special business. One is to know explanatory statement, and second is in extraordinary cases you can only discuss special business, not ordinary business. So nature of business, if it is a AGM, you can discuss ordinary business as well as special business. But in EGM, only and only special business can be discussed. Now we'll go into the quorum validity in general meetings. Very, very simple. Quorum is the minimum number of members required to be present to initiate a meeting. If quorum members are not, if not that many members are not there, then the meeting will be adjourned. Now coming to section 103. So 101 was notice of meeting, 102 was explanatory statement, and 103 is about quorum of the meeting. So unless the articles provide for a higher number, so articles can provide for higher number if they want. Otherwise, this is the standard rule. What is the standard rule? In case of private company, 2 members should be personally present. Now, personally present means quorum is not, the proxy is not counted in quorum. You have to be personally present. 1. Second, in case of public company, it depends. If you have 1000 up to 1000 members, if you have more than 1000 but up to 5000 members, and if you have exceeding 5000 members. So if you have not more than 1000 members, then in public company, it is said that you should have 5 members. Here, if it is 1000 to 5000, then they say you should have 15. And if it is exceeding 5,000, you should have 30 members. In case of private company, it is 2 members should be personally present. So again, let's make it and finish it off. Very simple. For private company, how much? 2 members personally present. Proxy not counted. That's what they mean. For public company, it is quorum is 5, 15 and 30. So if it depends on the number of members. Now see, this is from, if the members are greater than 5,000, then will come 30 members is the quorum. 15 is what? Not more than 1,000. Okay. So this is 0 to 1,000 members. If you have, then it will be 5. If it is greater than 1,000 but up to 5,000, then this is the quorum. Articles can specify for a higher number. So we have cleared that in private company 2 members personally present, and public company also 5, 15, 30 members, depending on the number of members that are there in the company, they should be personally present. Now coming to adjournment or cancellation of meeting. We've done this adjournment for not of quorum. So again, same thing is, if a present quorum is not there in half an hour, then the meeting stands adjourned for the same day next week. Notice of meeting will be given. I told you when adjourned meeting will be not less than 3 days notice should be given, and notice can be given either individually or in the newspaper. This is what I had explained. Notice of adjourned meeting. The meeting gets adjourned for the same day next week. Notice of not less than 3 days, and methods, either you give them individually or publicize in a newspaper. Now we'll see the next one is cancellation of meeting by requisitionist. Very, very simple. If I told you for requisitionist, meeting doesn't get adjourned, it gets cancelled. If the quorum is not present within half an hour of the time stipulated for a meeting called by the requisitionist under section 100, then the meeting stands cancelled. Quorum at the adjourned meeting. So what is a quorum? If only for the requisitionist it gets cancelled. For others, if a meeting was held and meeting had no quorum, this same meeting got adjourned, okay, on the same time the quorum was also not present. So if on the adjourned meeting also there is no quorum, then the members present not being less than 2 shall become the quorum. So also a quorum is not present within half an hour from the appointed time, then the members present shall become the quorum not being less than 2. Okay, so then we come to SS2, some points that the quorum should be present throughout the meeting. Very, very important. Now imagine if for some reason the particular quorum could not be present. In the meeting, initially they had come, quorum was present, and in between of the meeting they got up and they went away, there was violence. So the meeting, will it be valid? Answer is no, because quorum should be present throughout till the end of the meeting. Proxies are not to be counted in the quorum because it has to be personally present. Now this is very, very interesting. Representation by duly authorized representatives. Now section 112 and 113 have to be read. 112 and 113 have to be read, which says that, listen, if 2 people, President of India or the governor, they can also be holding shares. President of India can also be holding shares and governor can also be holding shares. Now they will not come to sit in the meeting. President of India will not come here to vote in his thing. What he will do? He will ideally appoint a representative to come. So when that representative come, it will be counted in the quorum. It will be treated as individual presences there. Because president and governor, due to their positions, they will not come into any meeting. They will send their representative. That representative is counted in the quorum, and it is counted as if the president and governor have been personally present. A duly authorized representative of the president or the governor is deemed to be a member personally present and enjoys all the rights of a member present in person. Inclusion of certain members. A member who is not entitled to vote on any particular item or being related to by being a related party shall be counted for the purpose of quorum. Now some matters are there which, if you are a related party, RPT transaction, related party transaction, so he won't be sitting when the resolution is being passed, but he will be counted in the quorum. Clear? Very, very important. That is, there was a matter, out of 10 matters, one matter was that my brother is being appointed as a supplier. So this is a related party transaction. I am related to him. So in quorum, I will be counted because that is just to initiate the meeting. When the meeting gets started, then if you read section 184, interested directors, read with 188 of your company law, which talks about related party transaction, the interested director is not allowed to sit into the meeting. So I'll say I'll be counted in quorum, but not for the, when that resolution is there, I'll get up and move out. It's to be counted, okay? Exemption of quorum requirement for postal ballot item. Now, when a matter is being done by post, so then the question of quorum and personal meeting is not there, only because everything is held through post and voting is also done through post. So when they say that the provision of quorum do not apply to postal ballot meetings. Now, multiple corporate representation by a single individual. This is also very, very interesting. Let's understand. One person can act as a representative for me. Let's say a company is there, a body corporate. Let's say there is a company A. Okay, it is holding shares in company XYZ. There is a company XYZ. So it has shares in company XYZ. There is company B also. They have shares in company XYZ. Now company A will authorize someone and company B also will authorize someone to go and attend the meeting. Now when they authorize, it is possible they have authorized Mr. Arun, and this guy has also, this company has also authorized Mr. Arun to represent their company. So can I say that there is a multiple representation by single person? Because when a company authorizes someone, this will be treated as personal. It will be treated as a personal presence because company itself won't come. They will authorize the person and we will count them in quorum. We will consider that you're a individual, you're personally present, because we have joint venture companies also where company A and company B are only two members. So they will send their representative. Their representative deemed to be a single person as a personally present. This guy will also do. So now, can this be counted as two persons? Because his company A representative and company B representative. So I want you all to tell me whether it will be treated as two representations or one representation. Companies are different, person is same. Company is authorizing him, this company is also authorizing. So the answer is, it will be treated as two authorizations. Very simple. So in case it will be treated as more than one for the purpose of the quorum, for purpose of quorum, he will be counted as more than one. If two or more body corporates who are members are represented by a single person, each of the body corporates shall be treated as a person personally present through the individual representing. For instance, if a representative of 3 body corporates should be counted as 3 members, okay, present in person for the purpose of quorum. It was held in Macleod Neil and Sons Limited. However, to constitute a meeting, at least 2 minimum members shall be present in person. Clear? To constitute a meeting, they are saying so everything that I am also counted personally present for Mr. Company A, for Company B. However, we will require another criteria that minimum 2 members, minimum number of individuals present at the meeting should constitute. However, to constitute a meeting, at least minimum number of individuals shall be present in person. Okay, so simple point is that you require everything. Even we will be counted as individual. There has to be other people also. Now comes one man meeting. Now, can one person be counted as the quorum of the meeting? That the quorum is present. Ideally, logically, it doesn't sound proper. So a single member cannot represent and constitute a meeting. To meet someone, there has to be someone else. This is a general rule. There are a number of decisions which firmly assert that a single person cannot constitute a meeting. In Sharp versus Daves and Dawood versus State of Maharashtra, that single person cannot constitute a meeting. However, now you have to tell there are some exceptions where a single member can be counted as a quorum. First is, as I told you, if central government, if your NCLT is irritated in section 97 that you have not held your AGM, then they can tell one person is the quorum. So that is there under company law. NCLT has been given a power to constitute one person as the quorum and meeting can be initiated one. And second is, if it is all the shares of that class is held by one person, if there is only one preference shareholder or preference shares were issued to one person only, so for that he will only come forward. So then that time quorum we will say that it's him. If a creditor is there, imagine if there's only one person who's given a loan, so class meeting, that one person will be sufficient to initiate the meeting. Now next what they are saying is Power of Attorney Act. See, power of attorney, what? That your proxy form is like a power of attorney. Power of attorney means what? I have given up something what I could do. I have appointed to someone else called as my attorney to do the thing. So in proxy, a member who cannot attend the meeting can appoint someone else who will attend on his behalf. So this is a proxy form by law is a power of attorney given by the member to a person to attend on vote on his behalf. In Power of Attorney Act 1882, it is just a language of saying that if a donor, the member has donated his power, just a language, donated his power to the donee, to the person to go and attend, and that person is attending the meeting. So they're saying the donee shall be treated as like the donor only, as though the real member has come, is what Power of Attorney Act is saying. That donee should be treated as the donor. Think that the member has only come. If a member of a company grants a power of attorney to another individual to make an investment or whatever, the presence of the donee. So donee is not coming with his own will. Someone has sent him. So it is as though the donor is only coming. Is considered as the presence of the donor. The donor is deemed to be personally present. Okay, and the donee is not treated as a proxy of the donor for Tata. Now this is for Power of Attorney Act. Okay, Power of Attorney Act. So that is different thing altogether. Or company jurisprudence we will just follow. We just read it. According to Power of Attorney, we say donor and donee is same. It's just the language. Now question. Now this is the exam question. Let's see. The Articles of Association of XYZ Limited having 700 members as on the cutoff date prescribe for physical presence of 7 members. So in this they told that physically 7 members should be there to constitute a quorum of the general meeting. The following are the status of persons present in the general meeting of the XYZ Limited to consider this. To check the quorum, he is a representative of governor of Maharashtra. So he is counted as in the quorum. They are preference shareholders. Preference shareholders are not counted in the quorum. Only equity shareholders are counted in the quorum. Mr. D representing company ABC Limited and XYZ Limited. So it is 2 because Mr. D is representing 2 companies. Multiple corporations given we'll consider in 2. This is 1. They are proxies of the shareholder. So proxies are not counted in the in the quorum. So therefore we have 3 people only. Let's see what is the answer. Since they are representative of the governor, they will be counted. Preference shareholders cannot vote except matters which they are which affects them or for 2 consecutive years. If preference dividend is not paid, only then they get this power to vote on all the matters placed before it. Otherwise, preference shareholders do not vote in AGM and EGM. Represent 2, so therefore 2 members, and this they are proxies and they are not personally present. Hence, only 3 members are personally present and they do not constitute a proper quorum, and therefore the meeting cannot be held. Then we'll see the provisions with respect to chairman. Now, chairman of a meeting, if you've ever seen, his main job is to preside over the meeting. So what is the role of a chairman? A chairman will initiate, normally you have a chairman's speech in the beginning. He will decide who will speak, the order of priority of speakers will be decided by him. A chairman gets a extra vote in case of equality of votes. When the votes have become equal, the chairman will get a casting vote. That is, he can vote additionally in case where there is equal votes are there, so that his extra vote can be deciding what he gets. Then the chairman, okay, in the end will prepare a report at the AGM whether it has been properly done, and the report is being prepared and sent to the ROC. Let's look at the provisions of chairman and who can become the chairman of the company. So very simple, section 104 of the Companies Act talks about chairman of the meetings. Unless the articles of the company otherwise provide, the members present will elect one among themselves to be the chairman of the meeting. If a poll is demanded on the election of chairman, it shall be taken immediately. For example, we could not decide and we said we want a poll. So poll will be a ballot paper everyone putting, and then we will see who gets the maximum vote. So it should be taken forthwith. Forthwith means immediately. And then we will select the chairman, because at the meeting chairman has to be there. So poll is demanded, immediately we'll take the poll, we'll count, and then we'll see who's the chairman, and it will be there. Now, secretarial standards on appointment and role of chairman, SS2. Now in your company law, there hasn't given much on chairman and their role, but that comes from your SS2. Okay, so your company law read with SS2, that is secretarial standard 2, you will come to know the real position of a chairman. Chairman of the board shall take the chair and conduct the meeting. If the chairman is not present within 15 minutes after the time appointed for holding the meeting, 15 minutes, if chairman is not present or he is unwilling to become the chairman, okay, then the directors present at the meeting shall elect one among themselves to be the chairman. If no director is present within 15 minutes, then the members among themselves will decide one to be a chairman and they will do. The chairman shall explain the implications of resolution before putting to vote. So the chairman, obviously every matter which is there, he will tell why does he want this resolution to be passed. Now we'll see the provisions of proxy. Now proxy is a person who is appointed by the member to attend and vote on his behalf. So if a member who is entitled to vote and attend the meeting is also entitled to attend to appoint another to vote on his behalf, attend and vote on his behalf. First is proxy need not be a member except if it is for Section 8 company. Section 8 company, proxy has to be a member. Logic is very simple that in Section 8 company, the NGO, the mindset of the people of NGOs are very different. So they say that when you're appointing a proxy also, keep a member of a company. One. Second, a proxy cannot speak at the meeting. He can only vote, and that too in a poll. So whenever polling paper is there, he can go and vote. He cannot participate in discussions of the meeting. The member will have to inform the company well in advance who is the proxy, and there is a particular proxy form also which we will see. So section 105 read with rule 19 and SS2, okay, talks about appointment of proxy. What do they say? Any member, what are they saying? Any member of a company entitled to attend and vote at a meeting shall be entitled to appoint another person to be a proxy and vote on his behalf. Proxy need not be a member except in Section 8 company. Section 8 company, proxy has to be a member. Proxy normally need not be a member. Okay. However, in Section 8, they are not entitled to appoint any other person unless such person is also a member. The proxy form. Now, how will the company come to know whether the member is coming or a proxy is going to come on his behalf? So, with the notice of the meeting, they attach a proxy form. It will be written that this is the notice, this is the time, place, agenda. They will say that, listen, if you cannot come, you can appoint someone else. This is MGT 11. Put the name of your proxy and deliver it to the company for 48 hours before the meeting. We'll see the timeline. Appointment of proxy shall be in MGT 11. Proxy participant, he cannot speak at the meeting. He is not even entitled to vote except on a poll. Maximum number of proxies. Now, this is also very, very important, and some people get confused in this. That a person, if I'm taking a proxy of one person, I can take irrespective of the shareholding. So I can take Ratan Tata has 50% shareholding of the company. I can be his proxy, carry 50% voting rights and go. Because I'm only carrying for one person. But when I'm carrying for more than one person, multiple persons, then the total shareholding limit that I can carry with me in the voting is 10%. So person can act as a proxy on behalf of not exceeding 50%, not exceeding 50 members, holding not more than 10% of the total paid up share capital of the company. A member holding more than 10%, 10 of the total shareholding can carry voting rights, may appoint a single person, and such person shall not act as a proxy for any other person. So let's me simplify it. It's very simple. The maximum proxies that can be taken is of 50 members representing not more than 10% of share capital of company. Okay, so both these rules have to be followed. So for example, if I ask you, can I take 55 members proxy? So 55 people are appointing me as a proxy. Allowed or not allowed? I want to take proxy of 55 members. Allowed or not allowed? Obviously not allowed. Because you cannot carry more than 50 proxies. Second, I want to carry proxy of 2 members. Of 2 members only, but they represent 60% of the shareholding of the company. Allowed or not allowed? Again not allowed. Why? Because you cannot carry more than 10%. Whenever I'm taking more than one member, then I cannot carry more than 10%. Now third situation, I'm taking of 40 people, 40 members, and all those chotu motu members are there. So collectively only 5% of share capital I'm taking. So this is perfectly allowed. So this is when I'm taking aggregate. But if there is one person who holds 20% shares in the company, he appoints Mr. X as proxy. Allowed or not allowed? So one person is giving 20% voting rights to Mr. X to go and vote as his proxy. So it will be allowed. Why? Because Mr. X is then not allowed to take anyone else's proxy. So for one person the shareholding limit is not there. Only for multiple person the shareholding limit is there. So Mr. X will now not be allowed to take anyone else's proxy. One member unlimited voting rights can be given. Okay. Then comes a statement in the notice regarding the. So then the notice only it comes as a proxy form is attached. So in every notice there shall be appearing a statement that a member entitled to vote can also appoint a proxy in his behalf. Time frame to deposit the proxy. So it is 48 hours before the meeting. So company cannot ask for a longer tenure, that if you don't give it 48 hours, give me 72 hours before. So I say, how will I know? I am not sure whether I will come or proxy will come. So company cannot tell me from way before. Maximum time frame from the date of the meeting, max earlier they can go is 48 hours. So what they say, that a company which specifies a longer period to deposit the proxy form than 48 hours is void, and then we will read it as 48 hours only. So shall have the effect as 48 hours only. So if the company has said that, listen, this is the date of meeting. Now date of meeting is there, they can tell you that you can give it maximum of the proxy form has to be deposit 48 hours before the meeting. Okay, so I say, okay, fine, 48 hours is fine. 48 hours before the meeting, I will give my proxy form and I will inform that, listen, instead of me, this guy will come. But if the company says, no, not 48 hours, you have to inform me 148 hours before, 150 hours before, 150 hours before. So then they say, no, this kind is not allowed. So we get good enough time to inform about our proxy. They cannot tell you that inform me 60 hours before the meeting. Let's say if the company has put that you have to inform 72 hours before the meeting, and I could not deliver it before 72 hours. I decided just a few hours back. So I can disregard 72 hours and I will consider it 48 hours, because even if the company changes or gives a more time, then 48 hours only by default will apply. Simple. So maximum time they can put is 48 hours. Can they put a lesser time? More time is not allowed. They cannot tell you that, tell me 49 hours before. 48 hours is the limit. Lesser time is fine because it is more in advantage of the member. They are getting more time. I can even tell that 2 hours before the meeting you inform about your proxy form. Still we will accept. So it is good for the members. It is allowed. Greater than 48 hours is not allowed. Lesser than 48 hours is allowed, because it is in favor of the member. Member can say, okay, fine, 48 hours limit, no, it's only 2 hours limit. So last moment I will decide whether I want to go or I want to send a proxy. Then member requested proxy list. So now who all are coming as proxy, company knows na. Ideally we saw 48 hours before the meeting all the proxy forms will come. So we'll come to know who is coming as a proxy. So the company at its own expense, first, okay, company cannot at its own, there's a new thing added, I'll just tell you, cannot issue invitation to its members to appoint proxies unless a member is requesting in writing a list of the person who are willing to act as proxy. So very simple. Normally, if I'm a member of the company, now pay attention to what I'm saying, very, very important, newly added. I'm a member of the company. I say I can't find a proxy. I write to the company that if you have any list of people who can act as proxy, I will pay them some amount, but I want them. So then the company can inform that, listen, we have this list, these people have told us that they are coming and they can carry anyone else's proxy, whatever is commercials you can deal with it. So such a list must be made available on the request of the member. Company proactively cannot say, you don't come now, you send list is there, you select one. That is not allowed. Company at its own expense cannot issue to its member to appoint proxies. We cannot tell you don't come send a proxy, you don't come send a proxy, list we have. That is wrong. Member can request the company that if we have a list of people willing to act as proxy. Once they accept, then we can give them the list. Proxy form should be duly authorized. Obviously, it should be in writing and it should be signed by the both appointer or his attorney, duly authorized in writing, or if it's a body corporate, under a seal. So it should be in writing and signed basically by either the appointer or the proxy. MGT 11, very important. Any instrument appointing a proxy, if in the form of MGT 11, shall not be questioned on the ground that it fails to comply with any specific requirement for instruments by articles of the company. So very simple. If we have made a proxy form in MGT 11, which is the main thing, then any special requirement in the articles is not required to be followed. Company can tell, listen, you give me MGT 14 plus 10 more requirements. They say, listen, extra requirements don't give. Any special requirements invalid. The MGT 11 shall not be questioned. It is a proper form. Inspection of proxy, as I told you, one can come and inspect the proxy at least 3 days, okay, of the proxy law, provided a written notice has been given by him. At least 3 days. 3 days notice has been given to the company. You can inspect the proxy. Then the proxy shall be made available for inspection 24 hours before the meeting fixed for commencement of the meeting and ending with the conclusion of the meeting. So for how long I can read? I have to give, first of all, a 3 days notice I have to give to the company that I want to come and inspect who are the proxies. And once they give me, I can read it 24 hours before the meeting, and till the conclusion of the meeting I can keep referring it. A fresh requisition confirming the above requirement shall be given for inspection of proxy in case the original meeting is adjourned. So the original meeting is adjourned, then a fresh request for 3 days has to be given for inspecting the proxies. Now SS2. Now let's read, because Companies Act has to be read with SS2. Acceptance of proxy. An instrument of proxy duly signed, stamped and filled is valid only for the meeting for which it relates, including adjournment thereof. A proxy shall be accepted even on a holiday if the last day on which it should be accepted is a holiday. So very simple, that proxy form is valid for the meeting including any adjournments thereof. Very important. Now stamping. Now there is a stamp that has to be stamped, okay, as per the state laws, and ideally that those adhesive stamp is put, which is Gandhiji photo, then has to be cancelled also. Which have not been cancelled are invalid. So ideally you put a cross, that is called as crossing of stamps, it is mandatory. Then proxy in blank or incomplete. So anything which is blank, it is invalid. Multiple proxy for the same members can also be given, provided it is within the limits. Revocation of proxy. Now imagine I have given the proxy but I attend the meeting, so it automatically amounts to revocation of the proxy. Second, the proxy came, he voted, I later came. Now I can't invalidate his votes. So if the proxy has voted, then the member cannot change his votes. If after appointment a member attends himself, it is automatic revocation of proxy. But once the proxy has voted, then it cannot be revoked. proxy of adjourned meeting revokes the proxy of the original meeting. If original meeting was there, I had appointed Mr. X. On adjourned meeting, I appointed another person. So that another person will be there now. If a proxy has been appointed for the original meeting and such meeting is adjourned, any proxy for the adjourned meeting revokes the original proxy. So we just see the date. If the who has the later date will be more correct. For example, I had given you a proxy for 25th to someone else. Now we'll see how we do it when two people come in the company. See, one is also saying I'm also proxy, that guy says I'm also proxy. Both are saying we are proxies. One says that I have Mr. X, I'm Mr. X proxy. He also says he's Mr. X proxy. Now who will we allow in the meeting? So we'll discuss that. Proxy revocation. A proxy is valid until a written revocation is received before the commencement of the meeting. So that's how you revoke, either by attending or by giving a notice in writing. Does the proxy have to be a natural person? Answer is yes. Because in company law they use the word a proxy cannot speak, means speaking is of a natural person. Second, when we went to section 2 to see whether proxy definition is there, it was not there. Then we went in rule 2 to see the definition of proxy, whether proxy has to be a natural person. So that was also not there. Then we went to proxy in the General Clauses Act. That time also we could not find whether proxy is a natural person. Then in the footnotes it has been written that a proxy has to be a natural person only. So can I appoint a proxy as a company to be my proxy? Answer is no. So company does not explicitly provide in the definition, but when we see that you can demand a poll, speak, all these are attributes of a natural person. In case law, in Western Bank Limited, it was held that a company was a member, it wanted to appoint another company as its proxy. It was held that proxy cannot be given to companies, it has to be given to individual person. The held at the term proxy, when they say you can appoint another person as your proxy, the person could be natural or artificial also. So in the case laws and the footnotes of Companies Act, it has been clarified that person is referred to natural persons or individuals such as speak, vote, demand, poll. Okay. So therefore the court said that a company cannot be appointed as a proxy. Now one important point is, if a proxy has been appointed, revocation of now pay attention, multiple proxy for the same member. Two people, remember I've given you an example that both the persons came and said I am a proxy for Mr. X. If a company receives a multiple proxies for the same member, the proxy which is the last dated shall be considered valid. So last dated shall be considered valid. So if they are not dated or do not consider any date without specific reference of time, then we will invalidate all the proxies. So very simple, if two proxies have come and they are saying that they are the proxy, then we see whoever is later date will be entitled into the meeting. But both on the same date, timing is different, then whoever has later time will add him. But if time is also same or time is not mentioned and date is also same, then we will say nobody is allowed to enter in the meeting. It is all the proxy forms get invalidated. Now we'll see your section 106. Okay. Section 106 talks about restriction on voting rights. Now imagine for a shareholder, this will come as a shock that you're not allowed to vote. There is a restriction on your voting rights. Will we allow it in company law? So answer is the company cannot restrict any member's voting rights unless there is unpaid dues. He has not paid his dues. Call money. call money is not paid and is partly paid share, then he'll tell him, get lost, we are not allowing you to vote. Second, if there is a lien on his shares, some money is recoverable from him, and he had done some, anything where we have blocked his shares, so then that will not be allowed. Otherwise, it's not possible to block anyone's shareholding. The articles of the company may provide that no member shall exercise the voting rights on which call money is not paid. Prohibition on a company shall not, except on the grounds mentioned under subsection 1, prohibit anyone from voting. So only on call money unpaid, only then we can restrict the thing. Then flexibility in voting on poll taken. A member is entitled to multiple votes. Their proxy, if permitted. On unauthorized voters may choose to utilize all their votes and cast them uniformly. Okay. So on poll, a member entitled to multiple votes. Let me explain. Normally, always by default, voting is done by show of hands. So it goes faster also, rather than take a poll, ballot paper and do the counting, etc. What they say, let's do by show of hands. So chairman sees all the hands are up, we do the counting and we pass. So this is normally done by show of hands. But in show of hands, it is always, if imagine I have one chair, I'll put one hand up. If I have two shares, I'll put two hands up. If I have 4 shares, I'll put both my legs. And if I have 5, so they say no. Voting by show of hands is not on number of shares, it is on head counts. So it is one member, one vote philosophy, irrespective of number of shareholding. So if Ratan Tata is there, he puts his one hand up, and even I am there, I am holding one chair, I'll put one hand up. So in show of hands, we just take one member, one vote concept. So who will get irritated in this? A person who has a very huge shareholding will say, what nonsense, I have 30% stake in the company and I don't want show of hands. So they have given that, listen, at time you can demand poll, voting on poll. In poll, what happens? You have one vote, one share, one vote. One share, one vote. So therefore, when matters are very critical and there are some heavyweight shareholders sitting, they can say, put this matter to poll. And in poll, one share, one voting will be done. So here they are saying that I can do multiple votes. I can put however voting I want to do. 3 here, 4 there. So if a person has multiple rights to vote because he has multiple shares, he can cast it the way he wants. Okay. He is entitled to vote and he might choose not to use them uniformly. He doesn't have to use all his votes in one order. It is his rights. He has bought the shares. He will vote the way he wants. Now, section 107 says by voting by show of hands. At any general meeting is first put to vote by show of hands unless a poll is demanded. A declaration of the chairman, shall be conclusive evidence that the resolution has been passed. So the chairman will count, or whatever he will put to count, how many hands are up, and accordingly he will put to vote. Okay, so we are done till here. The balance part, which is electronic means, and section 108 onwards, we will do it tomorrow. Clear till here? So we will continue this 108 and we will finish it tomorrow. Okay, so any other questions, doubts you all have? Is everything clear till now? Yes or no? Is everything absolutely clear? Because 108 is there, then we have demand for poll. Okay, I wanted to put in the chat box if everything is sorted and cleared. Yes or no? Not much. We can finish it now. Okay, great, Sona. Just wondering. So I want you all to tell me whether should I finish it now only or I should postpone it till tomorrow. Hmm? Should I finish now only or I should postpone it till tomorrow? In the chat box, I will read and I will do it. Just waiting. Should I just complete it because I think little bit more is only left. 108 is done. I want you all. I'm asking a suggestion from you all. Should I do it? Continue it tomorrow or do it now? Waiting for your answers. Let's proceed. What about others? VV Gupta, take rest today. No, I'll take the rest of the chapter, you mean, okay? What about others? I need others also to put in the chat box. Who can demand postal ballot in general? So postal ballot section is 110. We will come to section 110. See this. Let's do it tomorrow. Continuation. So there is a difference in decision making. Venkatesh Varan, nice. So what I'll do is don't worry, what we'll do is today we will wrap up here. You can keep it on hold. The balance I will complete it tomorrow. Because tomorrow as it is I will be taking the lecture. But you all can please go to the dream batch. I think some of you all are have not joined the dream batch. The link is in the description. Please go and study. So this part till the end I will complete it tomorrow and then I'll look up at another chapter, or maybe tomorrow I'll end this chapter and one in the evening I will keep my one lecture which I had missed last time. Okay. Thank you, Mr. Gupta. Don't worry. I'm perfectly hale and hearty and extremely fine now. Okay. So not an issue. So thank you so much guys for today being there for so long. Tomorrow I will start at 11:30 and I will complete this balance part of the chapter as well. Till then, study from the dream batch. Your job is not over. Your job is to continue. Okay. In dream batch, the notes are not available. Notes get unlocked with the full course access that is there. Okay. So take care guys. Don't forget to like the video and share it with your friends, and also give a shout out to our classes that we are teaching. Okay. So now great. Thank you so much guys. Well, I've been sitting for so long. Hats off to you all also. Okay. Take care. Study hard. Your job is to now go ahead, study, take up some other chapter and finish it off. Witty Fox, take care. Okay. And please do inform your friends about the dream batch also. Okay. That's all that you can do. All you'll have to do is share it in your WhatsApp and Telegram groups, wherever you all are there. Inform a friend about us. Okay. Rohit,